That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yep.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
Yes, indeed, everyone. Live from our Bloomberg Interactive Brokers studio in New York. I'm back at 7:31, Alex Steele.
I can look at Carol. It's not just me in the radio studio. It's a miracle.
There's a person across from me. We are also streaming on YouTube, folks. It is Monday, August 17th, 2020. I'm back in the office with Alex and looking forward to it because, Alex, we've got a lot to get to. We've got a new week for stocks. We've got an all-time high, it looks like, on the NASDAQ again. There's a lot of stuff going on.
Yeah, you have a pause in the backup in yields, but the S&P, touching that closing record high. You also have the DNC, Democratic National Convention, kicking off today, so that's going to be 4 days of politics. And apparently, everyone hates the post office, and everyone wants to save it at the same time. So
I love the post office. I'm just going to say it. And we kind of buried the lead because we've got an exclusive with Carnival CEO and President Arnold Donald. So we're going to talk with him about the future of the cruise business. So lots to get to over the next 4 hours. Let's get you going, though, on this Monday with a check on that trading day. Here is Doug Krisner. Hello there, Doug.
Hey, so we have a drop in yield, actually, with the 10-year Treasury down a little more than 3 basis points here. We're at 67 basis points, and perhaps that downward move in yield depressing the banks a bit because we're seeing weakness in financial shares. But that is being offset by relative strength among consumer discretionary and consumer staple stocks. So a mixed picture for equities. You're right, Carol. We've got the NASDAQ composite trading at record levels now, above 11,000 here at 11,126 with a gain of about 1%, but the Dow weaker by 0.2%, S&P 500 higher by about 0.4%. Dollar weakness today with the Bloomberg Dollar Spot Index down 0.2%. We've got a stronger yen, stronger euro, stronger offshore Chinese yuan, and a rally in crude oil right now with WTI trading 42.85 in the New York session. I'm Doug Krisner. That is your Bloomberg Business Flash.
Okay, I'm placing a stop on profit for euro at 118.756. Okay, so stop on profit place and 118.656. Sorry.
Dog days of summer, man. Let's talk to Vince Signorella. What are you watching?
Well, first of all, I'm so happy that just the little things that make you happy being back in the office. That was very nice to listen to. What I'm watching is something I think markets are overlooking, where everyone is really believing that we're going to reach this fiscal stimulus bill. The Democrats and Republicans can't agree on the price of a stamp. We're not going to get past this post office issue. They're $15 billion apart. The same pretty much percentage basis that they are on the fiscal stimulus bill. Both sides are going to blame the other as to why they can't reach it. Obviously, the Democrats are going to say this is the administration trying to influence the mail-in election. The Republicans will say these are funds not necessary for this particular stimulus and try to pull back on that. So I'm not sure. It's going to be passed in the House on Saturday. It goes from there. But once again, if this is another stall, it puts a lot of things in jeopardy. The election results, for instance, the overall real comfort feeling that we're going to reach a fiscal stimulus. Again, if we can't agree on this, I don't see how we reach a bigger, broader fiscal stimulus package.
Okay, stocks don't care. Dave Wilson, why?
Well said. Nice
well,
and
no, but
succinctly.
seriously, but I feel like if you had told the markets like 3 weeks ago we weren't going to get a stimulus till like September and we were very far apart, you would think the markets would have fallen out of bed because of the consumer spending issue. But markets do not care, Dave Wilson.
Or that would be talking about the post office
or
with everything else that's going on in the world.
Right. I mean, you look at the S&P 500's main industry groups, 11 of them, like Doug Krisner was saying, consumer-related shares are at the forefront. And, there are sort of two freight trains coming at the consumer discretionary category, which includes the retailers. It's not just what happens or doesn't happen in terms of fiscal stimulus. It's fiscal second quarter earnings reports. I mean, tomorrow you got Walmart and Home Depot and Kohl's, and Wednesday you've got Target and Lowe's and TJX and L Brands, and Thursday there's Ross Stores. So there's a lot that these companies have to get through. And, what we're seeing today suggests, people are pretty optimistic about what the second quarter numbers are going to look like. I mean, you can understand it to some extent because, you were talking about, if you look at the broader S&P 500, a second quarter profit decline of 44%, and now you're looking at 33% instead. So if people figure analysts kind of undershot with the retailers as well, there's going to be more positives to come. But it is really kind of striking, to see, that group. And it's not just Amazon.com among the retailers, although that's a big piece of what we're seeing today. I mean, people have to be figuring that the second quarter numbers are going to be great and that things are going to be okay going forward, that something's going to work out. It is rather striking.
Well, it is interesting, too, and I missed this headline earlier. I was kind of getting myself acclimated back to headquarters, but New York gyms can open August 24th with 33% capacity and masks.
How did you come up with that 33%, by the way? I literally, how do you do that?
I don't know. Treadmills only, and no, I don't know. But Vince, it's a reminder that we are slowly getting back to normal. I took an Uber for the first time since March this morning.
We are, excuse me, and I see Dave's point about that we're beating second quarter issues, but I'll raise him third quarter. Without the fiscal stimulus coming up, the third quarter is going to be a disaster. And that's the quarter that everyone expected the big bounce to come from. So if we see the markets or rather the economy take a leg back in the third quarter, and a big step back in growth, and a big step back in terms of retail sales income, which has been driving what's going on in the consumer spending, I think we're setting ourselves up for, will we get this all done in time? Will the politicians bite the bullet and say, we have an election coming, we need to sort this out, we'll blame the other side later, or will we continue to fade going into that election, potentially taking the fourth quarter out with it?
Yeah.
There's no way. There's no way that, this is what I end up hearing all the time from analysts and strategists, there's no way they're not going to pass anything. Is that wrong?
Well, yeah, in a way, I think we're going to need to see the 2008 Hank Paulson moment, where he goes to Congress literally, as he said, on his knees, and they told him, have a nice day. And then the next day or two, the stock market just totally was annihilated. And then he went back and said, I told you so. And they basically said, how much did you want to get? So I think we're going to need to see something like that. I think we're going to need to see a whoosh of some sort in risk in order to get everyone's attention. And then I think you'd be, that might be the opportunity to step back in, because we'll have taken out, I think, a lot of the really sensitive long positions or the long positions that are maybe margined up a little bit, and clear out a little space for real money to come back and step in.
Well, Dave Wilson, I'm going to tease your chart, because based on your chart coming up, it looks like we might not get that kind of cleaning out of the market anytime soon. So we'll get to that in just a moment. It looks like a great chart in terms of what we've seen, Dave, on the S&P 500.
Exactly. Biggest gain over 100 trading days ever. So the question is that all there is? We'll find out.
All right, good stuff. Dave Wilson, thank you so much. He's going to be along a little bit later on with his chart of the day, along with Vince Signorello. Thank you so much, global macro strategist at Bloomberg News, on the phone from White Plains. So we have a few big items, Alex, that are coming up in today's show. We've got a big interview with Carnival Corporation President and CEO Arnold Donald. It's an exclusive. He's back with us to talk about kind of how they safely reopen.
Yeah, and what I'm interested in is that you've seen the cruise liners, for example, rally pretty hard in the last few weeks. And I have to wonder, what is that pricing in? I mean, when do you really expect people to come back? But diehard cruisers are diehard cruisers.
Right.
So
talk to Charlie Pellet around here. I mean, he has done one cruise after another, and I think he's just eagerly waiting for that to come. Also, big week for politics. Alex talked about that earlier. We've got a former Republican strategist weighing in on that. Big drug deal, big power problems in California, and some big ideas on leadership. Frances Fry over at Harvard Business School. She's going to be back. She's a great voice, has a really smart book out this year, so we'll talk to her about that. Meanwhile, just real quickly, Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, 24%. Registrations of locally made Tesla vehicles in China fell in July 24% from the previous month as competition intensified in the world's largest electric car market. I thought that was a really important number today, Alex.
Yeah. That's interesting.
Right, a little bit of slowdown, and that's a needed market for Tesla. All right, let's get to world and national news headlines. Over to Nancy Lyons we go in our 99.1 newsroom in the nation's capital. Hi, Nance.
Hey, Carol. Speaker Nancy Pelosi is calling the House back into session over the crisis at the U.S. Postal Service. There are growing concerns among Democrats that the Trump White House is trying to undermine the agency ahead of the election. Pelosi is cutting short the summer recess with a vote expected on Saturday concerning legislation that would prohibit changes at the agency as tensions mount. President Trump today defended his actions on Fox News.
This has been one of the disasters of the world, the way it's been run. It's been run horribly, and we're going to make it good. Now, what am I supposed to do? Let it continue to run badly? So if you fix it, they say, oh, he's tampering with the election. No, we're not tampering.
President Trump's new Postmaster General, Louis DeJoy, has sparked nationwide outcry over delays, new pricing, and cutbacks, just as millions of Americans will be trying to vote by mail. The House Oversight and Reform Committee plans a hearing a week from today, with testimony requested from DeJoy and from the chair of the Postal Service Board of Governors, Mike Duncan. Well, new research has some scientists believing patients who've recovered from COVID-19 may have immunity for longer than normal. But director of the Harvard Global Health Institute, Dr. Ashish Shah, reminds us scientists are still learning more about this virus every day.
My goal is if we can keep people immune, if infections keep people immune for at least a year, then once we have a vaccine, we will be able to deal with that.
Shah says we're not out of the woods yet, with 50 to 70,000 Americans still being infected every day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Alex Steele. Jason Kelly is off this week. So I kind of, teased this before because this headline I had missed earlier. But New York gyms can open August 24th with 33% capacity and masks. And I think about, we talked with Jim Rowley, right, of Crunch Fitness, who was like, please, please, let us open up gyms. We've opened up gyms in some parts of the country and we've been doing well. You're a gym rat.
Yeah.
And will you go?
Here, I don't know how they're going to enforce the 33% thing, because I also don't know how you calculate that. And then does that mean I have to go at a certain time? And if I go at a certain time, that takes the whole point of a gym out of it. When you're like, I get to go when I want and do what I want. If that's not the case, and you have like a set time limit or something, that's not fun.
Yeah,
I do that.
No, I think it's interesting. I think you're going to have to, like a reservation, probably book your time, right?
Sense.
So that they can regulate how many people are coming in. But I do wonder if they'll be like, okay, we're only at, 28%. So, hey, everybody, and you get a text or something that, like, you can come in. Like, I do think the digital takeover will be even more persuasive.
I didn't even think about that. But I also wonder how they enforce it, too. I mean...
Well, remember what Rolly said, like, what do you mean, like enforce it?
Like at 33%. Like, I mean, literally, how do they do that? Do they have random spot checks? Do they have strict guidelines? You have to go and check the ventilation. Local officials have to check everything before you open. Like, I just wonder what the follow-through is. New York has been better at that than other states for sure, and other countries, quite frankly. Look at the UK and people coming in. There's lots of debate about that. But, I don't know how you enforce something like that.
Listen, I think they're going to have to be crazy, especially if they want to open and they want people to start coming back. And then hopefully if it's safely done, they can kind of up that number. But, yeah, I mean... just like our world, like I'm kind of learning, you know, the social distancing and how many people can be in a conference room. And I guess they're going to do the same thing, take out certain desks they do in offices. They'll take out certain equipment, right?
Well, all the masks, too. It's like enforcing everyone to wear masks when they're sweating and having a hard time breathing. That's going to be
right?
Not awesome.
Not awesome.
For those people.
But it is another sign slowly we're coming back.
Yeah, it's a different kind of normal, right?
Yeah, totally a different.
Give it a week, and Carol, this will feel so normal
I know.
for you to be back.
I said to Alex, I'm like, I feel like I'm in a new job. It's just crazy. All right, folks, this is Bloomberg Radio. All right, we want to welcome everyone who is joining us from Bloomberg Television. You are listening also to Bloomberg Business Week on Bloomberg Radio. I'm Carol Masser. Safe to say one of the hardest hit industries as a result of the coronavirus has been the cruise industry. And joining us right now is Arnold Donald. He's Carnival Corporation's president and CEO. He's joining us from their headquarters in Miami. Arnold, it is great to have you back with us. How are you doing?
Carol, thanks for asking. I'm great. How are you?
Doing
okay?
Yeah, kind of getting used to a new world order. And I guess the billion-dollar question, Arnold, you know, that everybody has on their mind is how do you get the cruise industry, how do you get passengers back on ships, how do you get ships back at sea safely and responsibly around the world?
Well, you know, Carol, first of all, you know, our primary responsibilities and therefore our top priority is always compliance, environmental protection, and the health, safety, and well-being of our guests, of the people and the places we go, and of course, our Carnival family, our shipboard and shoreside personnel. So, you know, the interests of public health is always in the forefront for us. And how do we get people back on ships? When there's social gathering and society has developed the compensating measures that is comfortable with, that we have effectively mitigated the spread of COVID-19, then we'll be able to cruise again. Now, there are a lot of people, as you know, Carol, who are ready to cruise right now. And in fact, we're looking at starting up in Europe where the spread has been mitigated substantially in places like Germany and Italy. And we're looking at starting up in September there, and a few cruise lines have. But there's a lot of pent-up demand, you know, for travel in general and especially for cruise.
Well, and what I wonder, Arnold, though, can you kind of drill down a little bit? What are some of the specific protocols that you might put in place to get ships safely back at sea? I've been reading, you know, about different folks and what they might be considering, different cruise lines. They're talking about no buffets, constant temperature checks, constant testing, maybe no excursions. What specific protocols will you be putting in place?
Well, again, as you well know, we have a lot of measures in place already on cruise that often shoreside destinations don't already have or didn't have prior to COVID-19. We do medical screens. We're already doing temperature checks in many cases. We had hand sanitizers throughout the ship and signs all over about washing your hands because we've had to deal with viruses in the over 700 ports and destinations we go to annually for many years. Now, of course, COVID-19 is especially unique because the whole world is shut down. And because of that, there's still a lot of learning around COVID-19. As you know from all the scientists, they're still aligning around epidemiology. They're aligning around testing. They're aligning around the role of testing. The one thing everybody right now is aligned on, though, is that, you know, good personal care in terms of wearing a mask, washing your hands, using hand sanitizers, you know, physical distancing at the appropriate times, but wearing a mask is a great way to mitigate the spread. So for the time being, any cruises that will happen will certainly incorporate some physical distancing and, you know, wearing masks. And of course, what we already had was the hand sanitizers, et cetera. Beyond that, there's a plethora of possibilities, but it depends on the destination, depends on the level of community spread in that destination, et cetera. So there could be various testing protocols. I mean, that's a possibility. For the U.S., it's premature. You know, we're not ready to sail here yet. Obviously, the community spread is still pretty vibrant here in the U.S.
Right.
And we're not in a position to sail here. And we're walking cautiously in the other places, too, because our primary interest is to stand with everyone else in mitigating the spread of COVID-19.
But I did read your Costa Cruises safety protocols, and you talked about 3 tests for crew members before boarding. You also talked about, of course, social distancing, new filters. Entertainment will have more shows on during the day so that there's smaller groups, and then also no self-service restaurants, so no buffets, which for many who go on a cruise, they're pretty used to it. So there are some changes coming.
Oh, yeah, absolutely. For the ones that are going to sail now, we have to be ready. Just like hotels today, any hotel that's open today has to deal with the current situation and the limited knowledge there is. And so for Costa, we are deploying a number of testing protocols. Obviously, for our crew, we have not only testing, but quarantine, et cetera, because it's really important for us to have the crew, you know, safe from the beginning and then to keep them safe. And obviously, once we get guests on board, we'll have protocols on board for them.
I do wonder how you do it safely. I mean, Arnold, you know this industry better than everyone and better than most in terms of lay personnel. But I wonder how you do it safely because there have been some smaller cruise operations that have come out of Europe, come out of Alaska, Tahiti. And I believe there were at least 10 crew members aboard your AIDA cruise ships out of Germany that contacted the virus ahead of you getting ready to kind of get back to the seas. That was in August. So I just wonder, how do you do this safely even when some small cruise operations are starting to go back out on the water and still having problems with the virus and people are contacting the virus?
Carol, I think there's two stages. One is you want to reduce the risk of having the COVID-19 come on board from shore. So that's the first thing. So you test and you monitor and you quarantine in the case of the cruise. So the ones you mentioned on AIDA, you know, those crew members were tested before they left their home country, and then they were tested again once they arrived in Germany. And we got some positives. They were then retested again. In several of those cases, the individuals got a double negative test after that, which meant they had a false positive. And then the others were obviously isolated and quarantined, and so the risk of them spreading it on board was zero because we wouldn't have them sail. Okay. Now, once you're at that level, the next question is, what else are you doing to mitigate spread? And that's where all the other practices on board. In the event you do get someone on board who has COVID-19, if it's in society, if it's out there in general, chances are you eventually will have someone on board a ship that will have it. And so the trick then, of course, is to make certain that you are able to quickly identify that, you can isolate the person, and that during the time they were exposed, there was plenty of mitigation of risk protocols in place, so the probability of spread has been greatly reduced. And that's where, you know, wearing masks, physical distancing, washing your hands, using a hand sanitizer, et cetera, all come into play.
Arnold, I do also wonder, you know, what are your plans for passengers and crew members who do get sick in the future? You know the horror stories of ships that were, you know, basically lost at sea. They couldn't find a home port. I know, and your team have spent, you know, a long time repatriating, you know, your crew members back home. So what do you do? Will there be a way to airlift passengers off ships? What will you do?
Yeah, you're absolutely right. You know, we had to repatriate over 80,000 crew members, and it took us quite a while with borders closed and airlines shut down, et cetera. So it took us several months to effectively do that, but we were eventually able to do it. With regards to now, you know, that was before. Now there's enough understanding. We would not go to a destination where we did not have a plan already in the event that there was COVID on board. We're not going to tie up thousands of people off of one positive COVID case or a couple of positive COVID cases. You know, we would have the protocols in place to ensure, one, that the individual is taken care of, whoever has it, that we can get them the care they need. And then number two, that everyone else is unaffected. You know, we would have some form of contact tracing on board so we know who were the most exposed people. But we have to have those protocols for each destination. We go to 700 ports and destinations around the world. So they're all not going to have the exact same protocols. But we will not go to a place where we haven't established exactly, in the event there is a COVID case, exactly what's going to happen.
All right, but you're not worried about, as we know, this virus, you know, spreads so quickly that you could go out to sea and end up with a handful of passengers or a lot more passengers, hundreds of passengers, and be kind of stuck at sea again. I mean, I'm just curious, kind of the worst case scenario, Arnold, what would you do in that case?
We won't sail into a situation where we could be stuck at sea. I think, again, there's a lot more knowledge now than when that was happening. Number one, you know, we'll have some capability of testing on board. When that happened before, we didn't. There's a lot of understanding now about how to mitigate spread. Back then, nobody was talking about, you know, while you were cruising, you know, potentially wearing masks or physical distancing, that kind of thing. And similarly, we have to look at the incidence of spread in a community. You know, we're not going to probably sail out of a community where the incidence of spread is very high because you're almost certainly then going to have it on board. So we have to have the protocols. We have a great group of advisors, scientific advisors. Right. A number of them participated in a summit on COVID that we held with the World Travel and Tourism Council. It wasn't about travel. It wasn't about cruise. It was about the science of COVID. And a number of our advisors participated in that we produced and I co-hosted with Gloria Guevara from WTTC. Right. And so we're using their advice. And of course, every destination is studying this, every port, every city, every nation. And we'll, as always, be in compliance. And so we'll all have a protocol in place because no one wants, thousands of people, stuck at sea. Nobody wants that.
No doubt about that. And I am curious about guidance from the CDC. I mean, what are you hearing, Arnold, right now from the CDC about what they want to see specifically from Carnival before heading out at sea again?
Well, CDC is concentrating initially on what we call the pause. A number of us volunteered to stop sailing and so on, and then the CDC issued no sail orders. And so they've concentrated on the ships because even though we're in a pause, we still have 12,000 crew required to minimally man our ships. The ships are still out there. They're still operating.
Right.
And so the CDC focused on that initially. And now they've started beginning to ask for public input and to be submitted in terms of consideration for crews going forward. But there have been no specific direction given on what's expected. What we're going to do is, again, use our expert advisory group to inform us, to use the experiences around the world that we have and others have, and we'll put together the appropriate protocol at the time we think that it makes sense to begin to consider cruising again out of the U.S.
So the CDC isn't saying anything, Arnold, like, okay, positivity rates, we want to see it, below 10%, below 5%. They're not giving you any kind of guidance like that, specific guidance.
No, not at this time. And I don't think, I think it's fine that they're not.
Yeah.
Again, right now, look at the U.S. In many places, we're still talking about sheltering in place, stay at home, very limited. Universities are figuring out what to do. Schools are figuring out what to do. And as long as we're not just comfortably socially gathering, then we shouldn't be talking about cruise. Now, you can comfortably socially gather with different protocols, physical distancing, wearing masks, et cetera. And at that point, when we're comfortably doing that in U.S. society, then we can seriously, take a look at cruise.
Yeah, no, listen, I get it. It's my first day back in our headquarters here in New York City. I have been home since mid-March. Hey, listen,
exactly.
It's like, it's crazy, right? Like, as we've tried to figure this out. Arnold, one thing I want to ask you while we're talking about the CDC, I mean, the CDC, you guys have read everything that they have put out. They have put out a strongly worded order as they continue to do the no sail and push that off for ship sailing here out of the U.S. They say the current scientific evidence suggests that cruise ships pose a greater risk of COVID-19 transmission than other settings. And they talk specifically some of the research that, the Carnival Diamond Princess back in February, they talk about it transmitting COVID-19 at a reproduction rate that was roughly four times higher than what we saw at the epicenter of Wuhan. Do you agree with the CDC's assessment that cruise ships pose a greater risk of COVID-19 transmission than anywhere else?
I think what the industry will do is show the history that we have with other viruses, for example, norovirus and other viruses that happen, and show how, in fact, historically the industry has successfully mitigated the risk of spread on ships, lowered the risk relative even to shoreside type of activities. Now, we can't make that claim today for COVID-19, but obviously that's what we aspire to and what we're working on. And I think we'll show a body of evidence to the CDC, which I'm sure they are also accessing. As I mentioned, we're being informed by very capable scientists and medical professionals around the world to take a look at this. But let me assure you, as a company and as an industry, the cruise industry, nor us as a company, want to expose any guest to a greater risk than they would have in similar activities shoreside. And so our focus is to make certain that, we are managing that risk at minimum, relative to what they would experience shoreside. And we aspire, of course, that when they cruise with us, they have less risk than the same experience shoreside. Now, when you talk about the Diamond Princess, I think people have to remember, number one, that happened really early on when there was very little understanding of COVID-19. Number two, that ship was a quarantine ship. The ship was in quarantine for 2 weeks. It was not just a normal cruise, okay? It was a quarantine ship. And so while it's an example of something that can happen, I think the practices today would be dramatically different than what existed at the time of the Diamond Princess.
Would you have
and
shut down?
And was different than what happened on subsequent cruise sailings.
So,
Yeah,
Arnold,
go
do you
ahead.
think if that happened today, and forgive me for interrupting, do you think if
No,
that
no
happened
problem.
today, you would have shut down immediately in terms of all operations, no new ships would go out? Because I do wonder, when you look back at February and March, you know, what did you learn? What regrets that you have that maybe do you wish you had shut down ships, you know, right after the news of some of the virus cases on Diamond Princess?
Carol, you know, it's not any analogy or breakdown if you push it too far, but should the world have shut down immediately once Wuhan province had a situation, you know, with COVID-19? I think you can only operate in the time you're in with the information you have. You know, back when Diamond Princess first started, there was not community spread around the world on COVID-19. There was very limited understanding of it. And even at the time of the sailing of Diamond Princess, there was very little understanding, you know, about COVID-19. Even now, we are still learning every day, you know, about this virus. And so it's not to make an excuse, it's just simply to point out that at that point in time, we did what we always do and what we will continue to do. We complied. We complied with every authority there was, the World Health Organization, the Japanese Ministry of Health. Actually, we didn't manage the quarantine or any of that.
Right.
You know, as soon as we identified it, you know, we went to the Japanese Ministry of Health told us what to do. And so, you know, our number one priority, you know, our highest responsibility is compliance, environmental protection, health, safety, and well-being. And so, you know, we would do that today. You know, whatever is the informed, you know, knowledge that exists, and whatever authority is telling us, you know, what we need to do, we're going to comply with that, as we always would.
You know, it's interesting, and I think we all feel this way, Arnold, even those of us in the media world. I think we were hearing stories and trying to make sense of it, but I think, I do wonder, do you feel like you got good advice from the WHO, from the CDC? Do you feel like out of Washington that the information decision-making that you were getting at that time, that it wasn't really good, that it was rather muddled?
I think, look, at the time, you know, Washington had very little to do with, for example, the incident in Japan, okay? Very little to do with that. And I think that all of these agencies are made up of people who are trying to serve the best interests of society and the public health. And so I think they do the best job they can with the information they have at the time.
Right.
And I think, again, are mistakes made? Of course mistakes are made. But it's not because of, you know, just irresponsible behavior. It's because people are genuinely trying to analyze and figure out what to do. And this is new. You know, we just have to keep in mind, it's not like there was COVID-19 popped up one day and there was perfect knowledge. Even today, we are still learning every day about this virus. And I think that we just all have to stand together, you know, around the world and share the knowledge and learnings and experience and figure out what are the best protocols to mitigate spread of this virus, while at the same time allowing society not to create other unintended consequences, whether they be economic or other health issues.
So talk to me a little bit about your timeline for getting back to sea, because I know when we initially talked about doing this interview, we thought that there would be ships this past weekend or yesterday coming out of Germany, and I know all of this is being kind of pushed off to September. So tell me about your expectations for September. Do you anticipate, you know, a lot of ships coming out at sea? Give us a little idea. And I do wonder, I know the no-sail order has been pushed off, certainly here in the United States. What are your expectations for the U.S. market?
Well, first of all, yes, September we will start in Germany, and we plan to start in Italy. We didn't start previously in Germany, even though we have a German brand, AIDA, which sources 98% Germans.
Right.
The ships are flagged in Italy, and so we weren't able to get Italy flag clearance, but now we have it, and we also have it for Italy. And so we'll start with a few ships. Initially, the ships will be cruises to nowhere. They'll go out to sea and then come back, so just a few days of cruising. That'll do multiple things. Number one, it allows us to manage effectively, you know, the folks on board, to handle the new processes, make sure all the training we've given our people on the new way to conduct and handle things.
Okay, we close position on euro at 118.656.
You know, screen initially to get started. So that's the initial. But then shortly thereafter, we will have, some longer cruises, and we will go to some destinations, again, approved by, the flag states and by the destinations with the protocols in place that they want. But it'll be a few ships at a time initially. And I suspect that overall, the industry will roll out slowly. With regards to the U.S., Carol, it's early. We'll see what happens. We've extended a number of our brands have gone beyond the no-sale order already in terms
Does it happen
of canceling
2020,
cruises.
Arnold? Or do you think it's more a 2021
No,
story?
I think there's a possibility if we can get the mitigation of spread down, and with people going back to college and high school and elementary schools and movement of people, if we can manage the mitigation of spread where we're seeing instead of a surge, a real decline, then I think we can begin to consider social activities, of which, of course, cruise is one.
Hey, listen, just got about time for one last question, Arnold.
Sure.
What is Carnival going forward? I've seen analysts over at Stifel, they've talked about a leaner Carnival Corporation, that the pandemic has allowed you to get rid of some assets that maybe you needed to, and that longer term, this is a positive. What kind of company is Carnival going forward? Just got about a minute left.
We'll be smaller in terms of number of ships. We had 106 ships or so. We've already either recycled or sold about 15 ships. Those ships, that would have happened over a few years. It just happened this year because obviously not going to generate any revenue in the short term here, and we can eliminate some costs as we prepare a longer runway to withstand, however long this thing lasts. But overall, we're going to be a stronger company. It's painful. We've had to take some people actions, but we have a deep bench. And once we start up again, we'll be bringing a number of those people back, and we'll add some new talent. But we'll be leaner and stronger. But most importantly, we'll still be the best vacation experience there is, and one of the best vacation values there is.
Well, I've been on a ship, so I wish you well, and the future should be certainly interesting as we all kind of get back to a new normal. Arnold, thank you so much. Arnold Donald, he is the Carnival Corporation President and CEO, joining us from their headquarters in Miami. All right, you are listening to Bloomberg Business Week. I'm Carol Masser. It is time to get a check on world and national news headlines. For that, let's turn things over to Nancy Lyons. She's in our D.C. studio. Hi, Nancy.
Hey, Carol, the Democratic National Convention will be one for the history books because it'll be almost entirely virtual, thanks to the pandemic. Tonight is the first night of the event with former First Lady Michelle Obama and former Democratic candidate Bernie Sanders on the schedule to speak. Bloomberg's Kathleen Hunter.
We're not going to be seeing the giant crowds and the confetti and the balloons that usually characterize a political convention. It's going to be people in different places giving speeches without audiences, and that's going to be quite a different dynamic than what we've seen in the past.
There will be 2 hours of live programming each of the 4 nights of the convention. President Trump is spending much of his week on the campaign trail with visits today to Minnesota and Wisconsin. Before leaving the White House today, he spoke about his plans to hold a memorial service for his late brother, Robert, later in the week.
Probably on Friday. We're looking at Friday. And we may do just a small service right here in the White House for my brother. We're looking at doing that. That would be, I think, a great honor to him. I think he'd be greatly honored. He loves our country. He loved our country so much.
Robert Trump died on Saturday at the age of 71. A Vermont 9-year-old has completed a major feat. He's visited all 50 national parks in the contiguous U.S. Jonah Matt from Westburg, Vermont, has collected 100 Junior Ranger badges during his travels. He says the highlight was seeing the dolphins at Channel Islands National Park in California. His next goal is to visit the last 12 parks not in the contiguous U.S. in Alaska, Hawaii, Virgin Islands, and American Samoa. He wants to do all of that by the time he's 13. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Alex Steele. So let's talk about mortgage delinquencies, because there's a story, lucky for me that I live in New Jersey. Prashant Gopal, who follows residential real estate for us, he says FHA mortgage delinquencies are reaching a record led by, my home state of New Jersey. Yeah. That's not a good thing.
No, but this is really bad. So
yeah,
those kind of
really
loans
bad.
rose to almost 16% in the second quarter. That's really almost double for for the first quarter, and it's the highest level all the way back to 1979. And the problem is that a lot of these mortgages are for first-time buyers, minorities, and low-income Americans, where you definitely are not going to get out from under that kind of delinquency issue.
Yeah.
And when you talk to housing people, you're always like, oh, what's delinquency? What's delinquency? They're like, no, it's actually okay. It's not too bad. But clearly, for this portion, that's not the case.
Yeah, and this is where I think for, when we have these kind of debates over more stimulus, more relief, I mean, there is huge segments of our population that are just barely getting by. And so, you miss a month, you miss a couple of weeks of salary, and that's a big deal. And I feel like this is what that's playing into.
Right, and I think it's a little different if you can tack it on to the end of your mortgage life, right? But
Right.
if you have to just pay it after after you're done, that's a different kind of situation. And I also have to wonder which banks are exposed to this
That's a
portion
great
as
question.
well, and if they have higher rates to compensate, and which banks are going to have that on their exposure list. Because like Bank of America is not going to,
No,
right?
but I think about some of those community banks, right, that
Exactly.
play into a certain neighborhood or community, and I do think that's something to consider in terms of, as we try to relate this back to, okay, what does it mean ultimately for companies and then the financial markets, right?
Yeah, exactly. So I think that's part of the issue. Obviously, banks are in a much better place than they were before.
Totally.
But you also have the emergence of, like you said, sort of not the shadow banking area, but sort of where it's not going to be regulated as tightly or have the same capital requirements as, like, say, a Bank of America as well. And how do you ever get out from under it?
And that's what I was thinking about. These numbers, when we do these stories, these are real people, right, that are struggling
Yeah.
to get by. And that's just
Did
something
you
to
just
think
print out
about.
paper? You printing out paper?
Oh, she
God,
caught
what
me.
is this woman?
She caught me.
The equity market is trading a little mixed right now. We have weakness in the Dow, but the NASDAQ composite is flirting with a record here. We're at 11,135, slightly off the session high today, but this would be a closing record if we hold the level that we are currently seeing. A gain right now of about 1.1%. We are seeing relative strength among consumer discretionary stocks and consumer staples, but the financials are weak today. And so too oil shares. And this is kind of interesting because energy, if you look at the price of crude oil, WTI is up more than 2.2% right now. We're trading 42.95. Now, we do have the diminished chance for a comprehensive stimulus package before September. That is clearly a negative. And then some people are a little worried about the fact that the U.S. and China have postponed talks to review the Phase 1 trade deal. Although earlier today, White House trade advisor Peter Navarro was telling CNBC this Phase 1 trade accord is on track. So the Dow weaker by 0.3%, NASDAQ comp higher by 1%, and the S&P better by 3.3%. We have Barrick Gold shares rallying. Warren Buffett's Berkshire Hathaway adding to its portfolio. Barrick, G-O-L-D, the ticker. And Amazon is reportedly in preliminary talks to invest in the U.S. cloud service provider Rackspace Technology. This is according to Reuters. The report indicating a deal could take 1 to 2 months to negotiate. Amazon shares better by more than 1% right now. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right. Thank you so much, Doug. Carol, you should know that Doug and I know the same acting people.
Oh my God.
We're the same theater nerds.
You two are so cool.
Right? I know.
No, not
we're
nerds.
So
cool.
Okay. It is time now for our Bloomberg Business Week feature here. Joining me is Bloomberg Business Week editor Joel Weber, alongside Seattle Bureau Chief Dina Bass. And the article is TikTok looks like a dangerous dance move for Nadella's Microsoft. Joel, first of all, any kind of pun like that, I dig. I can't write them, so I think that's pretty awesome. But in theory, TikTok, right? What made you write the story?
That's right. Well, as you know, Dina and Shelley Banjo, who wrote the story, kind of raised their hands and they said, you know, for as much sense as this might make for Microsoft, you know, it's like all their competitors are sort of on the sidelines. It doesn't totally jive with all the ways that Microsoft has really harmonized under Nadella. And you know what Nadella's really done, and we've written about this at length, including a cover story last year that we called the Nadella-sance. It was really another great pun. Was align around the cloud, and that has really been the source of investment and growth for them. So TikTok, which is, you know, it sort of is this shiny object almost, it doesn't always make sense when you think about it. And, you know, you brought up LinkedIn there, but for every LinkedIn, there's also been, you know, dabbles in experimental things like Clippy that haven't gone so well. So I'll turn it over to Dina there. And, you know, this is somebody who's in Seattle, watches Microsoft and has watched Microsoft for many years. And Dina, what's the counterintuitive sort of argument for why this might not make so much sense for Microsoft?
There's a professional network of office workers. Microsoft knows a lot about office workers. They make software for them. They also have successfully bought Minecraft, but they know a lot about gamers. The audience that fuels TikTok is teenagers and young adults. Microsoft doesn't know that much about them. They've done poorly in those markets in the past. Again, outside of gamers, those are not strong areas for them. And in fact, their consumer business over the years has, other than selling PCs to home users, hasn't gone very well. And Satya Nadella has largely pulled them out of many consumer areas. So I think there's a real question of whether they have any idea how to successfully maintain this kind of community, as hot as LinkedIn is. I think the other issue for them is because they've stayed out of these areas, they've flown under the radar of a lot of really difficult issues, particularly around content moderation and U.S. and European regulation of that. TikTok has already been fined by regulators in the U.S. for collecting data belonging to children. The New York Times had a story last week saying that they have a very large number of users who are underage. And for Microsoft to wade into this issue of having to filter out, child sex abuse material, potential terrorism material, racism, hate speech, to have to regulate political speech in a way that various congressmen and congresswomen went after Google and Facebook for in congressional hearings 2 weeks ago, you sort of have to wonder, why does Satya Nadella want to get into that?
So why does he, Dina?
Because the asset is a unicorn, not a unicorn in the way that people use it for tech startups to mean a company valued over $1 billion, of which there are many, but a unicorn in the true sense, one of a kind. It has a ton of appeal globally. It has a lot of U.S. users. There's great revenue and profit potential there. It's hugely popular. And, what I have heard from my sources is that, Nadella and the board see this as potentially an opportunity to turn around that conventional wisdom we just discussed, that Microsoft doesn't know how to market to consumers or how to do social media or advertising particularly well. It just seems like a good opportunity.
And how much of that is just the advertising opportunity, Dina? Because that is the thing that they would be able to get here by acquiring this teenage audience and getting younger, is that thing that Microsoft has really never had, is that cool factor. And obviously there could be huge revenue opportunities by tapping into that in ways that currently they don't really have that same thing in the way that the Facebooks of the world would.
Yeah, this with one stroke of a pen and a lot of regulatory approval, of course, because any deal would still have to be approved on several levels. But with one stroke of a pen, it would leapfrog them immediately into a market that Facebook and Google dominate, and where Microsoft is largely absent. Microsoft has tried several times over the years to get into advertising. They bought a company called Aquantive. They had to write down almost the entire value of it. They have a search advertising business, but that's running off of their Bing search, which is, not super popular. So this would really get them into that market, almost instantly. And it's partially advertising and partially, as you mentioned, that age demographic. Microsoft really runs the risk, again, apart from gamers, of missing out on that demographic and not being relevant to them. When I talk to students, to my own children and to other students, most kids in school are using Google Classroom, using Chromebooks. There is not the imperative to use Microsoft software for the way that there was for my generation, for computer users in the first generations of the PCs and the 80s and the 90s. Kids now grow up and they can go through their entire day without using Microsoft software, really, or maybe they have Windows on their computer, but they don't know. Often they don't even have Windows. So this is a demographic they've got to figure out how to be relevant to. I don't know if TikTok is the answer to that.
They have to be cool, Alex.
Yeah, I don't know if Microsoft seems cool. But so, Dina, we have maybe 30 seconds left. Who makes more sense in buying TikTok?
I think that's a hard question. We've heard from sources that Twitter has had conversations with them. There's certainly social media companies that have a better idea how to run this sort of thing, but Googles and the Facebooks of this world would have antitrust issues. Remember, any buyer has to pass both antitrust muster and foreign trade and regulatory muster with the U.S. government, and it has to be approved by the White House.
All right, we're going to leave it on that note. Man, we are living in interesting times. Dina, thank you so much. Dina Bass, Seattle Bureau Chief at Bloomberg News, on the phone from Seattle. Check out her story in Bloomberg Business Week. Joel Weber, of course, editor of Bloomberg Business Week. He was joining us on the phone from Massachusetts.
Did your daughter do TikTok?
No.
She's 17.
Yeah, not a lot.
Is she too old?
No, but we're kind of strict about how much she can do.
Do her friends do it? Does she want to be doing TikTok?
She checks. She doesn't.
Really interesting. Take it or leave it.
Yeah. So far, but often on her phone all the time. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business next.
From Bloomberg World Headquarters in New York, I'm Doug Krisner, 3 p.m. on Wall Street, which means we have an hour remaining in today's session. Right now, equities trading mixed. Weakness in the Dow, but the NASDAQ composite is at a record high, 11,137. So we're higher today by more than 1%. Generally speaking, we're seeing relative strength among consumer discretionary names, also some of the consumer staples moving up along with information tech, but that's being offset by some weakness in the financials. Long-term interest rates a bit lower today. 10-year Treasury down about 3 basis points in yield. We're trading at 68 basis points on the 10-year. So the Dow weaker by 0.3%, S&P 500 higher by about 0.3%, and the NASDAQ composite, as I mentioned earlier, with a gain of something greater than 1% right now. The U.S. and China have postponed their talks to review the Phase 1 trade deal, although earlier today, White House trade advisor Peter Navarro was telling CNBC this trade deal is still on track. Goldman Sachs strategist David Kostin boosting his year-end price target for the S&P all the way to 3,600. His previous target was 3,000, so at 3,385, we're obviously above that level. Kostin cited Goldman's above consensus expectation for U.S. economic growth. We have shares in Barrick Gold rallying today. Warren Buffett's Berkshire Hathaway has added Barrick to its portfolio. Amazon is reportedly in preliminary talks to invest in the U.S. cloud services provider Rackspace Technology. Reuters indicating a deal could take between 1 to 2 months to negotiate. And we're seeing Bitcoin today rally past 12,000. It's now at its highest level in more than a year. That said, today we're seeing a little bit of dollar weakness with the Bloomberg Dollar Spot Index down about 0.2%. Flip side has produced a stronger Japanese yen, stronger euro, and a stronger offshore Chinese yuan. WTI crude oil in the electronic session right now with a gain of something more than 2% to 42.85. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Yes, indeed. You are listening to Bloomberg Business Week. It is Monday. I'm Carol Masser along with Alex Steele. Jason Kelly is off today. We're in our Bloomberg Interactive Broker studio. So, Alex, one more thing to worry about as a result of the coronavirus, and that is its impact on our civil liberties and as a result, our global economy. So, just
it's a light story for this Monday.
Just add it to the list of things to worry about. In today's Business Week Economics, let's get more on this with Bloomberg New Economy Editorial Director Andy Brown. He joins us on the phone from New York City. Andy, nice to have you here with us. Tell us about your column this week, because you talk about civil liberties, and I do think it's something that we're trying to understand. In order for us to kind of get back to normal with this virus, what do we have to give up?
Yeah, well, I hate to add to the general doom and gloom, Carol, but I mean, it is an important topic, and the idea is that ever since the Middle Ages, when there were these huge campaigns against the plague, the state or rulers have used epidemics as an excuse to expand state power at the expense of the individual. There's a brilliant book on this by a professor of history at Yale called Frank Snowden. The book is called Epidemics in Society from the Black Death to the Present. And Snowden points out how the methods that the state uses to control epidemics and expand its power really hasn't changed much for hundreds and hundreds of years. They're restricting the movement of people, using quarantine and sanitary cordons, seizing control of the economy, which of course we're seeing plenty of today, engaging in mass surveillance. What the autocrat actually wants to do, really wants to get inside your home. And indeed, home invasions were a big feature of the campaign against plague in the Middle Ages. And so we're seeing all this playing out, in almost exact detail today, except, of course, the tools that the state has at its disposal. These digital tools in an AI era are just massively more powerful, and that's particularly true in the area of surveillance.
What was interesting is that, I think it was in The Economist, I forgot, and they did an article pretty much similar to this that talked about, did the countries that have authoritarian dictatorships do better in managing COVID than those that didn't? And the answer that they came up with is that no, it actually was based on the trust in the leader. Can you talk a little bit about in your work what you found in terms of that part of it?
Yeah, the economists are exactly right. That is critical. But the tools, what I was focusing on more is the tools that the state is deploying. And actually, some of these surveillance technologies have been mobilized most successfully and most intrusively in democracies. I mean, it crosses political categories. So, for instance, Israel is now using these enormous troves of cell phone data that it was collecting as part of its anti-terrorism, counter-terrorism campaigns to track the movement of people, with COVID. South Korea is using credit card data. Singapore, Hong Kong require visitors to put on bracelets so that authorities can monitor their movements. And the surveillance, this comes as no surprise, of course, has been massively deployed in China. And indeed, in China, they are fusing this concept of public health with ideas of national security and deploying all of the vast technologies and state capacity against COVID-19 that they use to control the population socially and politically. So it really sort of crosses all areas, and as I say, poses a very, very serious threat to civil liberties. I mean, clearly there's a trade-off between public health and individual privacy. Desperate times call for desperate measures, and a degree. To an extent, I mean, individuals are going to have to sacrifice civil liberties. The question is the extent of that and whether or not these civil liberties can be restored when the emergency is over. That's the critical thing.
You know, Andy, it reminds me after 9/11, right, with the Patriot Act. I mean, we were all, we were so concerned about our country. We were all traumatized, understandably so, as a result of the attack here on U.S. soil. But, we gave up some civil liberties then. And I do think this is kind of a continuation of it, this fear, right? And we think the state is, hopefully taking care of us and what we're willing to give up in exchange for the state taking care of us.
Yeah, I mean, that's true. You get very little, I mean, historically, you get very little resistance, either from citizens or from civic leaders. They figure that, the state needs to do something, anything, right? They're traumatized, they're terrified. And of course, it's that sentiment that governments exploit. They know that they can grab more power during an emergency because people are ready to cede it. But I mean, the critical thing here, and United Nations human rights bodies emphasize this, is, a couple of things. First of all, you need democratic oversight of these measures. The emergency measures need to be proportionate to the threat. They need to be as least intrusive as possible. But above all, they need to be temporary. And the problem is it's far easier for governments to grab power than it is for citizens to claw it back once the emergency has passed. And this is going to be, I think, really a defining battle of our generation, which is that this tension between civil rights and pandemic control. I mean, this COVID-19 is just the start. I mean, we're living in an age of pandemics.
Yeah, exactly. Yeah, man, that's kind of sobering on this Monday. Thanks, Andy.
Yeah, we appreciate that at times. But it is interesting to see how you claw back anything. I think is a really interesting point, and especially when you do it on your own volition, people don't do it.
Exactly, and so that's why he talks about these longer-term consequences of giving up or more of our civil liberties. All right, Andy Brown, editorial director at Bloomberg New Economy, on the phone in New York. All right, back to World and National News headlines. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, President Trump is in the Midwest today, stopping in Minneapolis to speak at an event with small business owners who were impacted by the rioting following the death of George Floyd.
My message to Minnesota is clear. I'm here to help you. We will bring back law and order to your community. We will bring it back, and we'll bring it back immediately.
Trump has blamed Democrats for the damage caused by the unrest. House lawmakers are so concerned about the changes happening at the Postal Service, they're cutting short their summer break. Bloomberg's chief Washington correspondent Kevin Cirilli says Speaker Nancy Pelosi has ordered them back to Washington to take up the issue of funding for the USPS.
Speaker Pelosi saying that those conversations could happen as early as this weekend. Democrats also calling on Louis DeJoy, who heads, of course, the USPS, to testify publicly in a House hearing next week. Whether or not that invitation is accepted, we don't know.
Well, they have received confirmation that Postmaster General Louis DeJoy will appear next Monday. White House Chief of Staff Mark Meadows has said that Republicans would back $10 billion in funding for the post office, but any package will also need to address stimulus checks for individuals and small businesses. Pelosi today told Democrats on a conference call their package calls for $25 billion to be allocated to the Postal Service. Well, voters and candidates in New York are among the first to file lawsuits against the administration and the Postmaster General to make sure that the Postal Service is adequately funded to fulfill its function. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you very much, Nancy Lyons. I'm Carol Massar, along with Alex Steele. You found a doozy. This is a fun story, I guess.
If only Jason would be here. First of all,
maybe he's listening.
I just want to point out these studies should not be put out in the middle of COVID, but apparently,
stop it, people.
This is a report. Men should consume no more than one alcoholic drink a day, and this is according to a federal committee's recommendations for new U.S. dietary guidelines. It just, again, feels like in the middle of COVID, super unfair, but it does say that it causes more severe health effects and has longer-term consequences than we knew.
Yeah, exactly. And so it's kind of interesting. I mean, yeah, I guess okay, it's not funny, but man, I have heard a lot of people just talking about how much more they're drinking.
Yes, no,
because of the virus.
Coming back to work was a godsend for my liver. Because at least, like, I'm literally physically in the office for so long, I'm too exhausted to drink when I get home. But, like, oh yeah, and they say that, like, alcohol consumption was up, like, 23.6%. Since March. That's alcohol sales are up since March, since the pandemic hit, versus last year at this time.
But what happened to that whole idea of, everything in moderation, right? This whole idea of, you can have maybe one drink a day and it'll be fine.
Right. That they said, okay, well, 2 for men, right? 1 for women. Well, apparently that is no longer the case. That's what I'm saying. Like, it's a good article.
Yeah.
Thank you for telling us that. We'd like to know this. Can you just tell us after there's a vaccine?
It's updated every 5. Yeah, exactly. But what I will say is it's also updated every 5 years. So who knows in 5 years where they're going to be like, you know what? Actually, it's okay.
Or even worse, you can't have any alcohol ever again. But I didn't know this. Maybe you knew this. But apparently women lack an enzyme in our stomachs. So alcohol is not metabolized before it gets into our bloodstream. Oh. And men have more body water. So alcohol is actually diluted more, which is part of the reason why women shouldn't be drinking as much as men. I did not know this.
I did not know that either. It's interesting. And meanwhile, the alcohol lobbyists apparently have been voicing objections about this. And some scientists have suggested a greater focus on binge rather than moderate drinking is more important.
Wait, they want to focus on binging?
Well, they're saying, like, be more concerned about people who do binge drinking.
Yeah.
Yeah, this is Bloomberg.
So we have about 42 minutes remaining in today's session. Right now, equities are mixed with the NASDAQ comp at record levels. Let's cross to the Bloomberg Macro Squawk Desk, check in with Bill Maloney for the latest. Hey, Bill.
Hey, Doug. U.S. stocks, like you said, trading mixed right now, with NASDAQ outperforming once again. Dow's currently down 89 points. S&Ps are up 9. NASDAQ climbs by 1%. The U.S. 10-year yield at 0.68%. WTI crude futures are up 2%. Gold is trading higher by 36 points. And transports are a little changed. Leaders to the upside in the Dow, Home Depot and Walmart. Note Home Depot is at a record. Boeing and American Express led to the downside. In other news, the Carnival CEO sees the possibility of U.S. sailings in 2020. And wrapping things up, NVIDIA gained as much as 7.3% to a record, while Tesla topped $1,800 a share and also traded at a record. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. In terms of economic data, we had a gauge of home builders' sentiment jumping to the highest level that we have seen in some time, a reading of 68. This is from the National Association of Home Builders, a 6-point gain over the number that was reported for July. 10-year Treasury right now at 68 basis points. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week on this Monday. Alex Steele, I'm Carol Masser. Some deal flow that we got to tell everybody about. Today, you probably already did to your TV audience, Ms. Steele.
Yes. Sanofi, making a pretty sizable deal, though. I mean, you may roll your eyes at what they bought, but it's still a $3.4 billion deal to buy biotech company Principia. And Sam Fazeli of Bloomberg Intelligence, who's covered the biotech space for decades, joins us now. He joins us from France. Sam, you spoke to me on TV, and you're like, yeah, who cares about this deal? No one cares. So thanks for that, after I pitched you to radio. But I guess the significance is more sort of how this industry is going to evolve throughout COVID.
Yeah, so sorry, Alex, I'm sorry about earlier. I didn't mean nobody cares about it. It's just that in terms
I'm messing with you, it's fine.
The deal's announced, the share price doesn't go anywhere. I mean, it's up about the average of what's happening in the pharma industry. So I think it's more about the fact that a lot of people had anticipated it. There was a lot of talk about this. So, I mean, COVID or no COVID, pharma companies are still, in fact, because of COVID probably, driven by the pandemic, driven by the macroeconomic situation, the pricing of drugs, the price pressure on drugs is going to continue. We had that already with in Europe post the previous 2008 debacle that we had, and that obviously led to a significant impact 2 or 3 years down the road on pricing the negotiations with national buyers in Europe. So I suspect this, which is likely to be even more profound, is likely to drive the same. Now, the same in the U.S., you hear about drug pricing all the time in the U.S. So what that means is that companies need to have innovation. Innovative drugs that really make a difference to people's lives and disease can make inroads, and few people get in the way of getting those on the market and pricing them as open as possible. That's why innovation is important. That's why biotech is important.
Yes, I totally agree. But I guess one of the things
he's saving face from last time on TV.
Oh yeah, see, he saved the good stuff for us. I'm just gonna say. So Sam, what I do wonder is a deal like this make some other drug combination likely, or is there somebody that's got to go and do a counter deal because of this?
Yeah, that's a great question. I don't think so. I think there are other companies. There are lots of companies with these BTK type drugs.
Burst my balloon. That's fine.
No. But we've already had kind of one of these, which was quite interesting. Loxo Therapeutics got taken out by Lilly for a much bigger number, about 3 times higher, back about a year and a half ago. And nobody had paid too much attention to the second drug they had in development, which was one of these kind of drugs. And that made a difference when it came to the news on that drug, which is in the same class as the Sanofi Principia drug. But I think a lot of that kind of is playing out already. There are only so many of these new molecules that you're going to want to have competing with each other. By the time you get to the 4th or 5th, unless you're completely different and much better for some reason, you're not going to get much traction. And so I don't really see any other company necessarily benefiting from this deal. But the sector as a whole I think people have been waiting for deals. As a whole, could see some more interest. And when I look at SMID Biotech, they're generally green today.
Fair point. Let's broaden it out for a second to the overall virus. You're in France, and France was saying that every indicator for COVID is moving higher. You have nightclubs shutting down in Italy, bars and restaurants are crunching their time in Greece. Can you give me some perspective on this? Because when we hear that, it sounds bad. The market doesn't necessarily react. So I wanted to get sort of like what that means from Sam Fazeli's point of view.
Yeah, sure. So I don't live near Paris. Paris, obviously, like London, like New York, like the major cities, suffer in a slightly different way given the density of the population. I live closer to a city called Bordeaux, and when you walk around town, everyone's expected to wear a mask. And I have to tell you that I think more than 95, 96% of people respect that. And they just do it in the streets, right? That's kind of what's being asked for people to do. In the provincial towns, you get a little bit less of that, but people are very diligent on this. And interestingly, despite that, you're getting the spikes, which seems to be, I have a whole variety of ages of children, and the 18, 19-year-olds have really been socializing as much as possible. That is, I think, where the core thing is, and I think that's pretty much known, that the virus is circulating in the younger group. And of course, that obviously means that they're likely to bring it home and pass it on to the older group, unfortunately.
Hey, Sam, just got about 45 seconds left. We caught up with Carnival Corporation CEO and President Arnold Donald, and they're looking to start some cruises out of Germany and Italy come September. Does that make you nervous?
Oh, absolutely. I mean, we know what can happen on these things. People have called them floating petri dishes. But at the end of the day, I don't know about the details of what they're going to do to keep the virus in check on board. I'll give you an idea. There was one boat, and I know we have little time here.
Just about 25 seconds. Go ahead.
25 seconds. That left shore with about 120 people. None of them tested positive twice in a row. And there was an outbreak, and about 103 or 104 of them caught the disease. This wasn't a cruise, but it was a boat. So you got to watch out.
Yeah, it's not going to be easy. It's a lot of people in a small setting and a closed setting. Sam, thank you so much. Sam Fazeli, I thought he was killer.
Sam's the best.
I think he was better on radio than he was on TV.
Wow, mean. Sam's the best. Love Sam, love Sam.
Senior pharmaceutical analyst at Bloomberg Intelligence right here on Bloomberg. Yes, indeed, it is Bloomberg Business Week. Carol Master along with Alex Steele. Coming up, the chart of the day. Did you get a theater song on Friday when I was out?
Did I get a feeder song?
Theater.
No, are you crazy?
Aw,
no.
man. All right.
But I did. It was a George Harrison song, so at least I knew who George Harrison was. Not that I guessed it right. This segment really stresses me out.
Okay. All right, coming up, we're going to get the chart of the day, and it's taking a look at the equity rally, specifically the S&P 500. Dave Wilson will be along in just a moment. Let's get back to Doug Krisner with a check on your top business stories. Hey, Doug.
Hey, Carol, we've got a rally in the NASDAQ Composite. We're at a record level right now, 11,137. Today's intraday gain is about 1.1%. We do have strength among consumer discretionary names, but a lot of the financials are down today because long-term interest rates are a bit lower. 10-year Treasury with a yield of 68 basis points. Tesla, a bright spot in the NASDAQ. Stock is up about 10% right now. Dan Ives over at Wedbush raising his price target for Tesla to $1,900 from the current target of $1,800. And American Airlines being hard hit today. Shares are off by more than 5%. A report indicating that American is going to cut flights to some small and medium-sized cities as the aid for the industry will expire at the end of September. CNBC reporting up to 30 destinations could be on the chopping block. It's time now for the Bloomberg Small Business Report. Here's John Tucker. All right, John, thank you so much. Dollar weakness today with a Bloomberg Dollar Spot Index down about 0.2%. Flip side, we've got a stronger yen, stronger euro, and a stronger offshore Chinese yuan. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Mr. Krisner, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Alex Steele, and this is Bloomberg. God.
No, that I know. I know this one.
Do you know who it is?
Yes.
I just saw a great,
Peggy
documentary.
Lee?
Yes!
She did it! See, you just
Dave
gotta give me the little
Wilson! Are we happy or what?
Who's we?
We're so happy he's not even talking to him.
Oh, come on.
It's all good. I mean, I actually had another song in mind, and then this one popped into my head as I was taking a shower this morning, and I thought, maybe it's something that Alex might actually get.
Wow, there's a lot of information right there. Yeah, she did.
I did. I'm very blessed. Thank you. It's my last day subbing for Jason Kelly, so I feel like this is like a well-earned win for me.
We've warmed her up. We've got it going.
Sending her out on a high note.
Yes, totally. All right, so tell us a little bit about your chart of the day. And can I just say there's a great documentary, I think it was either on PBS or something, about Peggy Lee. It's really very cool. I'll have to find it and kind of share it with all of you. Anyway, Dave, take it away.
All right. Well, what it comes down to is, for the 100 trading days that ended Thursday, we saw the S&P 500 rise almost 51%, and that was the biggest gain over any 100-day period in its history. So the question sort of naturally arises, is that all there is? Can you expect stocks to keep going when they've gone up so much? And it's something that got Ryan Dietrich's attention. He's a chief market strategist over at LPL Financial. and he's sort of a history kind of guy when it comes to markets. So he went back and looked at previous periods in which we saw the S&P 500 shoot up, not 51%, obviously. He picked 22% as a threshold. I kind of cut it down to 25%, so you really have only 9 other instances before this year where the peak gain over a 100-day period for the S&P 500 was 25% or higher. And when you run the numbers on the Bloomberg terminal, you find out that almost every time the index was up over the next 12 months. The one exception was 1987-88. We all know the market crashed back then, so, you know, it's understandable that you would have a loss for that period. And in fact, with Dietrich's sort of expanded universe, that was the only time out of 18 that the index fell over the next 12 months. So what it tells you is that, you know, market history is kind of on the side of, shall we say, the body in motion remaining in motion. So the answer to the question, is that all there is, may well be no. I mean, given the market's history, that's the key. If you want to know more, folks, send me an email. I'll get you the chart. The explanation goes with it. And everything I do going forward, the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I'm just going to say she's ready. Go ahead. What were you look like you were ready.
Me? Oh, no, I was just, first of all, I was just still basking in my glory, but of the song. But also, I was just wondering, you know, it's so easy to compare, you know, history when it's like, is this time different? I feel that's what made me laugh, because I feel like everybody's now saying, well, I don't know, I think this time is different.
Yeah, exactly.
Well, you inevitably get that, and clearly a 51% gain is bigger than anything we've seen in the past. I mean, it's evident from the chart. You know, you'd be hard-pressed to find even a 40% advance over 100 days. So does that change the equation? Does that 1 month decline we had before the recovery change the equation? Who knows? But you take history and try and do what you can with it. And that's what the folks at LPL do and other firms do. And so, you know, that's what the chart does.
I'm just going to say, I mean, I feel like at some point we're just going to be like the big drop off and then the big bounce back. We're just going to be like, yeah, whatever, like, and just move on. And I feel like the market begins kind of after that again. You know what I mean? Like, I feel like it just balances itself out, right? We sold off a lot. We bounced back.
Well, that's what you were talking about last week too, right? Because at the Fed. Weren't you making that point that, like, it doesn't really matter because there's a Fed put in a way that we haven't had before? So there's a whole different kind of setup and support and scenario. Yeah. And who was I talking to earlier today? I think it was Chris Smart from Barings, and basically saying, like, what's going to move Congress's butt is going to be a huge sell-off in stocks, right? And then that's going to be it. It's like bad news has to be bad news to get the good news.
I actually was listening to that. When you're on TV. I know, crazy, right? Aw, a little support there. All right, Dave Wilson, thank you so much. Check out his chart of the day. Dave Wilson, our stocks editor. He'll be back a little bit later on with his stock of the day. All right, back to World and National News headlines. Back on over to Nancy Lyons. Hey, Nance.
Hey, Carol. Well, the first night of the Democrats' National Convention will feature a lineup of several former Republican officials who are backing former Vice President Joe Biden over President Trump. Officials announced that former Ohio Governor John Kasich will be making remarks, along with former New York Representative Susan Molinari and former New Jersey Governor Christine Whitman. Also on today's speaking schedule, former First Lady Michelle Obama and former candidate Bernie Sanders. Well, as the Democratic National Convention kicks off tonight, polls show that Joe Biden has a solid lead over President Trump. Bloomberg's Amy Morris reports from Washington.
An NBC News Wall Street Journal poll shows Biden ahead by 9 percentage points. A CBS News poll shows him ahead by 10 points. And a Real Clear Politics average of general election polls shows Biden ahead by 7.9 points. A Washington Post NBC News poll shows Biden with a 12-point lead, and it indicates more than 54% of voters are following the election very closely. That's a high watermark among campaigns in the past 20 years. In Washington, I'm Amy Morris, Bloomberg Radio.
The Interior Department says it has cleared the way for the government to open the Arctic National Wildlife Refuge to oil and gas companies. The administration is authorizing a sweeping plan to sell drilling rights with a possible auction by the end of the year. The refuge is home to polar bears and caribou and has been off limits to oil drilling for decades. Environmentalists argue that Arctic oil development imperils one of the world's last truly wild places. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. And there was a story Nancy mentioned that we want to just talk a little bit more about. It caught both Alex and my attention. And as Nancy talked about, the Trump administration authorizing today a sweeping plan to sell drilling rights and spur oil development in Alaska's Arctic refuge. And so we could see a possible auction by the end of 2020. And let's not forget that when we talk about drilling in the Arctic, it gets pretty political very quickly.
Well, I was going to say, I mean, like, what oil company in their right mind is going to say okay for drilling lease in the Arctic when President Trump might not be the president in a year? So it's hard to get a little bit too excited about that. And look, you know, Conoco is a huge driller in the Arctic,
Yes.
and they've been doing that, and they're advancing oil projects there. But then you have BP, which is not exploring for any oil in any new parts.
Well, that's what I wanted to ask you. We keep talking about kind of, you know, the collapse in terms of oil prices, right? Do we need to be drilling? Help me with this. Yes?
Yeah.
Kind of always?
Well, there's two schools of thought. Like, one is that the energy transition and companies like BP, which is going to drop their production by 40% over the next 5 years, that is actually going to create a supply gap, and that oil prices will shoot higher because we'll need that oil to transition. And others are saying, like, we're going to have enough oil through, you know, shale, et cetera. OPEC is coming back on, et cetera, that we won't necessarily need it. But drilling for new oil is different than, like, putting in R&D money to find better technology to get more out of the oils that you have, right?
Right.
And I don't know any majors that are necessarily doing something like that for the Arctic.
So do you think most people
Guyana,
are
going
to be like, thanks, but no thanks?
Kinda, especially when like this is a political football in the U.S. I mean, because of the different administrations. I mean, why not just go off the coast of Brazil or Guyana and do some deep water there?
Because there's always the risk that you start to do this, right? And then
they
the
take it
new
away.
administration comes in and says, yep, that's not going to happen.
Which is exactly what we would be worried about in terms of Vice President Joe Biden, in terms of no new permits on federal land.
And already conservationists have talked about challenging the administration's move. So no surprise on that, right? Because as we said, this is quite the political football. All right, interesting story. Check it out at Bloomberg.com. This is Bloomberg Business Week, and this is Bloomberg Radio.
So we have less than 13 minutes until the closing bell, and at this rate, the NASDAQ composite is going to set a record. Right now, we're trading 11,141 with a gain that is greater than 1.1%. In terms of the standout performers in the NASDAQ market, you got to look at Tesla. The stock is rallying by more than 10%. It's trading above 1,800 for the first time. Wedbush analyst Dan Ives earlier raised his price target on the stock to $1,900, up from $1,800. Now, he points out that Tesla is set to reveal new battery technology and some cost-cutting advancements on September 22nd at a Battery Day event. And Ives is also expecting to see a rebound in demand in China, and that will help the company reach its goal of 500,000 deliveries this year. Also, to the downside, want to talk about Carnival Corp. Carol, you'll know this. The guy who runs the company, Arnold Donald, was talking to you and Alex, talking about the resumption of U.S. cruises this year, but he ended up saying, really, it's too early to make a determination with public health restrictions still in place, and those shares are weaker by a little more than 4.8%. So we've got the Dow down about 0.2%, S&P 500 better by about 0.4%. And a 10-year Treasury down in yield to 68 basis points. That may be one of the factors weighing on the financials because they are down today as well. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, everybody, just about 11 minutes left in today's trading session. It is time for the drive to the close. With us is Leslie Marks, Chief Investment Officer and Head of Investment Management at BMO Private Wealth Canada, on the phone from Toronto. Leslie, nice to have you here with us. You know, it's interesting. We continue, despite some of the troubling headlines about the economic outlook, about the virus, about so many different things, about the upcoming elections. The markets, maybe even today, if we're off a little bit, except for tech stocks, continue to overall grind higher. Why do you think that is?
Well, I think, you know, a lot of people are wondering the same question, and you're not alone in thinking about that. And I think the real question comes back to still the fundamentals. And we really are well into a recovery. I mean, it's been a very quick and deep downturn, and now we're also experiencing a very quick and rapid recovery. So there is some fundamental basis for the movement in stocks or riskier assets. And of course, there's the liquidity question and what's coming on, or what we're experiencing both on the monetary and fiscal stimulus side, which really supports markets moving higher.
So basically, thank you, Fed. We know you're going to be there, right, if we get into trouble. I mean, that's it, right? Simply put.
Very much so. I mean, you have to think about how important the Fed is and just in general, low interest rates in fueling our economy and our equity market. And, you know, we tend to sometimes look at our own situation and look around and say, you know, I see a lot of you know, stores or restaurants shuttering and bankruptcies are high. But remember the age-old expression, right? Don't fight the Fed. And as long as we have this level of liquidity in markets, that is going to continue to fuel riskier assets to move higher.
All right, so good for investors who are potentially in the financial markets and taking on riskier assets. But what about kind of real people who are out there who maybe are on unemployment, maybe those benefits stopped, you know, maybe those temporary layoffs become a permanent layoff for them. When does that become more problematic, and that we start to see that in terms of, you know, people who are out of work, don't have money to spend, and that ultimately impacts the economy?
Yeah, I mean, that's definitely a key question, that divergence between Main Street and Wall Street. And that would be one of the risks that we're watching over the next few months, because this is really where we will start to see around the world a change in support for citizens. And, eventually we have to move off of the support level, especially if the economy is recovering. And I think that is where we could start to see markets start to flatline. What we've seen is a very strong and fast surge, but looking for that next move higher, we are going to have to see a greater or a broader recovery in employment numbers. Obviously, the unemployment rate is falling, but we are a far ways off of where we were earlier in the year when we were at that 3.5% level in the U.S., for example.
So you sent over some interesting research, and it's got a great title. It's called Netflix at Home or Theme Park Thrills. And I do feel like, that's our world right now, right? Should I stay home, play it safe? I was just talking with some family members who want to go to Disney World or Disneyland, but they're thinking maybe this is maybe not even a 2021 story. But tell us about that.
Well, I think it was just that concept of do we continue on the path that we're on, or have been, through lockdown since March, where we're all sort of laying low, staying at home, where those kind of what we would call COVID beneficiaries continue to ride higher, so the Netflix, the Amazons of the world, or are we going to see a broadening of our economy or economic recovery and start to see some of these more, let's call it the leisure oriented companies like a Disney, or even, you talked about Carnival earlier in the program today. Will we start to see that happen and broaden out this recovery? Because if it's only a few companies driving the stock market, that doesn't really make for a very healthy recovery in markets. And so what we want to see for that next level higher is a broadening out of the economy.
How do you look at yields right now? 10 years, 68 basis points?
Well, yields are really interesting because since March, there's really only been one story in yields, and it's been moving lower. And it's been interesting to watch what's happened over the last week. And this really ties into my comment about broadening out that recovery, because what we started to see is yields started to move a little bit higher. And guess what? Those high performing technology names started to underperform, and we started to see the financials participating in the economic recovery. And we've also started to see some of our, I'm in Canada, in Toronto, but in Canada, the mining sector is still an important sector, and we started to see a broadening out of recovery in some of the more, not just gold, but some of the more cyclical metals, as well as things like forest products such as lumber. And so if we, we are seeing rates kind of nudge a bit higher, and I think that is a reflection of a small move higher in inflation, but also, we don't know if that's sustainable, but interest rates will move higher if people start to believe that the economic growth is going to move sustainably higher, and that will broaden out the recovery.
But do you believe that? Just got 30 seconds. Do you believe that's going to happen?
I do believe that. I think that it may not be a straight line upward, but I do think that this economic recovery is going to broaden out over time. Yeah.
All right. Good stuff. Leslie, thank you so much. Really appreciate it. Leslie Marks, Chief Investment Officer and Head of Investment Management at BMO Private Wealth Canada, joining us on the phone from Toronto. That was more upbeat.
Yeah, I don't know. I don't buy it.
I didn't think you did.
But I'm a more pessimistic individual to begin with, so there we go.
I think there's a lot more shoes to drop that we haven't seen yet.
Well, also, maybe the shoes just tread water. They don't go anywhere.
Which is also not great.
I have to think about that.
Then you need, rubber shoes.
Right.
Galoshes.
I don't know what that means, but it means something. Not good.
All right, folks, just a few minutes left in today's trading session. We'll count you down to the close and take a look at movers and shakers. This is Bloomberg.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. There you have it. Sound of the closing bell for this Monday, August 17th. And a mixed picture for equities. Nonetheless, it looks like the NASDAQ comp is going to manage a record finish here at around 11,129 with a gain today of about 1%, although to be fair, the index finishing off session highs. The Dow, though, down about 0.3%. We had relative strength among some of the consumer discretionary names, but that was offset by weakness in financials. Maybe the financials were weak because long-term interest rates came in just a bit. Typically, that's going to compress the net interest margin for banks just a little bit. 10-year Treasury last quoted in New York at a yield of 68 basis points, so we're down more than 2 basis points in New York trading. Meantime, in the broader market, we have the S&P 500 with a gain of about 0.3%. One of the bright spots in the NASDAQ today, Tesla, stock was up more than 11% today, finishing above 1,800 for the first time. Dan Ives, the analyst who is widely followed over at Wedbush, raised his price target on Tesla to 1,900. Now, Tesla, he points out, is set to reveal some new battery technology along with cost-cutting advancements, this at a Battery Day event on September 22nd. Now, Ives also expecting to see a rebound in demand in China, and that, in his view, will help Tesla reach its goal of 500,000 deliveries this year. In the minus column, American Airlines stock was down more than 5% today. The carrier will reportedly cut flights to some small and medium-sized cities. Now, we know that the aid to the airline industry is set to expire on September 30th, and CNBC reporting that flights for American to up to 30 different destinations could be on the chopping block. And Berkshire Hathaway adding Barrick Gold to its portfolio. That gave a lift to shares in Barrick today. They were up by more than 11%. Dollar weakness with the Bloomberg Dollar Spot Index down 0.3%. This is Bloomberg.
All right, everybody, let's take a look at some of the stocks on the move in the Monday trade. Let's do big picture, as we like to do. I'm Carol Massar along with Alex Steele. S&P 500, 249 names higher today, 255 lower, 1 unchanged. If I look at those major industry groups, Alex, in the S&P 500, top of the pack, consumer discretionary, up about 1.2%. Bottom of the pack, financials, they were down about 1.5%. So that's kind of a look at your trade. And we know that tech, I think, in general, was an outperformer today.
Yeah, Apple maybe not have been, but
so
tech
much.
overall was.
Yeah.
GM also stood out to me. That stock was popping up by about 8%. So here's the why. You had Deutsche Bank adding it to a short-term buy list, saying that there does seem to be a possibility that the company spin off its EV unit, which would give you the chance to value it separately, obviously. Yeah. But specifically citing CEO Mary Barra on the conference call for the second quarter, sort of not putting it in a box altogether, but kind of maybe leaving the door open a little bit. Right. And so that a positive for GM. They also had like a $2.5 billion debt offering in 3 parts. I mean, like record high issuance.
Debt offerings.
Yeah, record high issuance in high grade so far, and like it's only August. It's already at a record like 1.3 trillion or something.
It's pretty remarkable. Yeah. I want to talk about Carnival just because I caught up with Arnold Donald earlier right here on Bloomberg Radio and Bloomberg TV. Carnival shares, they're your number 2 decliner in the S&P 500, down about 5%. Their stock is down more than 70% so far this year. There's a couple things going on that's definitely impacting the travel industry. We did see some concerns about rising COVID-19 cases, certainly seeing that out of Europe, so there's some concerns about that. And I think Ryanair, right? You saw that in terms of the airline sector. So I think people are looking kind of at that travel space once again. I do want to say the Carnival CEO did say to me that community spread in the U.S. still pretty vibrant. So looking at, whether or not they could start doing ships out of the United States, not anytime soon. So no plans to sail in the U.S. as of yet. He did say there's a lot of pent-up demand for cruising. And I will say, anybody I know who's been on cruise ships, man, they are people that go back again and again and again.
It's
Serial
true.
Cruisers.
What I find interesting is he's like, the U.S. is nowhere near ready, but they're considering sort of Italy maybe in Europe, and Europe's a lot better. But that was the story a couple weeks ago. I don't know if that story holds because they're having all these regional issues and regional shutdowns. And I don't know what happens if you go on a cruise and in the middle of the cruise, the country that you're from has a 14-day quarantine and you can't get back because you're stuck on a boat.
Exactly.
Like, I mean, there's things like this.
Right, and this is what's tricky with a company like that because they've got to deal with different, countries, different regions. I mean, they've really got to find out the rules, and those rules, as we know, can change in 24 hours because of another outbreak.
I'm taking a look at L Brands, 52-week high. I would not have thought that, hitting 28.19 within the session. I mean, I'm trying to find the news for it. I mean, we get a lot of retailers.
Stocks at 59% this year.
We get a ton of retailers, but like I thought this was the company that wasn't supposed to do well. I thought it was like the Walmarts and the Home Depots that we were going to be into, not the L Brands. So this kind of shocked me for sure.
Try to look and see what's going on. Yeah.
It has earnings.
What's
the 19th? When's 19th?
That's
Wednesday.
Yep.
After the market Wednesday. So clearly running into the earnings tape.
Yeah, definitely on a run. We mentioned the airlines, the Ryanair news. They took a hit. American Airlines, your number one decliner in the S&P, down more than 5%. And I think UAL was also on that list.
Yeah,
too,
I mean, it's all about cutting capacity. I mean, the thing is, American Airlines in particular, they're going to cut some flights to small or medium-sized cities. Maybe if the aid deal expires, they don't get more. Ryanair cutting capacity. This is not a short-term fix anymore for these guys. This has to be a long-term. The government has to be in it to win it, which raises the question for me: is the airline that win? Are the airlines that win are going to be the ones that whose corresponding country has the most money to give them? Like, is that literally how we're going to pick winners and losers in the airline industry from Europe to Asia to the U.S.?
Wow, that's very possibly, right? What kind of kills me is I feel like the airline industry had just kind of figured it out, right? They had cut out a lot of capacity. They were charging you for everything. They were figuring out how to kind of be viable in a strong way. And then, of course, the virus happens, and then, that's upended. All right, let's do a quick check on the volatility index report. The VIX on this Monday, here it is, down 2.8%. The VIX closing at 21.43. This is Bloomberg.
Dave Wilson. That's the best intro. I always keep saying that. But okay, so what are you looking at? Stock of the day. Give it to us.
InvestNet, Alex. That's it. It's a provider of account management software for financial advisors and planners. And the company's website says its programs handle more than 12 million investor accounts, totaling $3.8 trillion in assets. InvestNet was founded in 1999 and went public as 2010. The ticker is the first three letters of the name, and that's ENV, InvestNet. The company shares have risen as much as tenfold in the past decade. They set a record 10 days ago after second quarter results beat analyst estimates. InvestNet moved to take advantage of the stock's strength today with plans to sell $450 million of convertible notes. The 5-year securities will be sold privately. The company will use most of the proceeds to pay off a revolving credit facility, which had been tapped for $275 million as of June 30th. Now, the sale may end up increasing InvestNet's shares outstanding, and that prospect didn't go over well. The stock suffered its biggest loss in 4.5 months, amounting to 7.1%.
Yeah, that's pretty tough. Stock's up about 13-14% so far this year, so really took off a lot of what it had seen.
I'm also really impressed that you were able to say InvestNet multiple times and clearly without losing it, because I would not have been able to do that.
Snorted. Sorry.
Thank you, Alex. You can come back.
It's a tricky one.
Yeah, well, it's just because I got the song too, so I think maybe Dave loves me now.
She's riding a little bit of a high here.
Totally
I'm just going to say.
It's all good.
All right, it is all good. Dave Wilson, thank you so much. Bloomberg Stocks editor and columnist Dave Wilson. And if you missed his chart of the day, be sure to check it out on Twitter. All right, first day, trading day of the week is over. So let's.
But yeah, I mean, please, like volume though, crazy light.
I know.
mean, down 20%.
You can feel it.
Yeah, so it definitely is a summer Monday, and in Europe, it's particularly grim. It was off like 40%. So let's just keep all that in mind.
All right, perspective. All right, let's get some perspective on world and national news headlines. For that, it's over to Ed Baxter in San Francisco. Hello, Ed.
Hello there, Carol. Yeah, real problems here in California. Governor Gavin Newsom
says the state is in the middle of an energy crisis. He says with searing temperatures, the state today will run short of its energy supply. Newsom says the state is scrambling now to find supplemental energy before it has to start turning stuff off.
And we are working with experts across the spectrum to address the immediacy of this crisis, to understand the conditions that led up to it, and ultimately to address the anxiety that each and every one of you are facing, and to make sure that we never come back into this position again.
Now, Newsom says he's working with major users to reduce the demand. He also says there will most probably be rolling blackouts over the next several days. He also says there are 15 active wildfires burning in the state, about 4 major, and he says the state is in a position to successfully fight them. But he says this crisis today has to come up as a wake-up call across the board. Democratic National Convention begins today. Democrats are describing it as an intimate chance for the party to show its vision, programs, and leadership. Bloomberg political contributor Rick Davis says don't expect any surprises immediately.
But I do think what we'll hear is really the best foot forward that the Democratic Party has to try and convince swing voters, especially, that they have a case to be made for Election Day.
Yeah, special coverage following Daybreak Asia here on Bloomberg Radio, and Rick is coming up next here as well, so there is a wealth of Rick Davis riches here. And the New York gyms permitted to open on a limited basis as soon as August 24 in San Francisco. I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you very much. You're listening to Bloomberg Business Week. Carol Massar along with Alex Steele. So Alex, and I know our producer Ariel Agami is probably just like shaking his head and so upset, but Aunt Becky, a full house.
Yeah.
Lori Loughlin should go to prison for at least 2 months for conspiring with her husband to pay $500,000 in bribes to get their 2 daughters into the University of Southern California. Federal prosecutors saying this ahead of the couple's sentencing this week.
I have to think of like the federal prosecutors saying that. Does that mean it's going to be like a
that
week
they said
and a
Aunt
half?
Becky? Oh,
Yeah,
a week and, oh, you mean a week and a half?
Yeah, like if they're saying 2 months, and I think they're saying 5 months for her husband, who apparently was like more involved
The
with the whole
mastermind?
thing. Yeah, that I wonder if it's actually going to be like nothing.
Well, how do you feel about that?
Being nothing?
Yeah.
I think it's terrible.
I think it's terrible too. You know, I sit there with my daughter all the time. My husband and I was like, actions have consequences. And, you know, there are penalties when you do something wrong. And I just feel like it's another case. And I think a lot of people would argue that it's a case of, once again, wealthier white individuals getting off pretty easily.
You said that so nicely. I was going to say, if you're rich or white, though, you can do what you want. I mean, that's like kind of what the message is. But, you know, I mean, with the 2 girls, that they seem to also pressure them too. Apparently, you know, posing
Felicity Huffman did 9 months.
Right. It's like posing for
$750,000 fine. Sorry.
No, it's okay. I'm just very excited. I mean, the kids like posing for phony pictures to make it seem like they were legitimate rowers, for example, to get into school. I mean, what kind of lesson is that teaching your kids? So, I mean, I don't think she should go to jail for like 20 years. I'm just saying, like, if that was a regular person, like, what would be the consequence?
Right.
Not
and
2 months.
Right. Exactly. And who didn't have maybe, you know, the means to hire, you know, big time lawyers and stuff. So I'm sorry if this is getting a little, you know, opinionated, but I mean,
isn't that the point of these segments? Right? People
feel free to send your commentary to us,
especially if you don't agree, because then we'll take you down.
Anyway, Aunt Becky, she will be sentenced. Looks like in the next week or so. So we will find. Oh, actually later this week, I guess, at some point. All right, interesting story. Check it out if you want all the details about Varsity Blues. You can check it out at Bloomberg.com. Carol Massar, Alex Steele, and this is Bloomberg Business Week on Bloomberg Radio.
So we had a mixed day for the equity market today. On the positive side, tech stocks outperformed, but many in the big bank group were down. This was after Warren Buffett's Berkshire Hathaway pared stake in some of the industry's top names. So if you look at the major benchmarks, the Dow weaker by 0.3%, but we had a record high for the NASDAQ comp on a closing basis, 11,129. But to be fair, we came off the best level of the day. In the broader market, S&P 500 with a gain of about 0.3%. Tesla shares rallied more than 11%. Wedbush analyst Dan Ives raising his price target on the stock to 1,900. He is expecting to see a rebound in demand in China, and that will help Tesla reach its goal of 500,000 deliveries this year. Weak, though, shares of American Airlines down 5.3%. The carrier is going to cut flights to some small and medium-sized cities. You know, the aid for the industry is set to expire September 30th, and CNBC was reporting that up to 30 destinations could be on the chopping block. Warren Buffett's Berkshire Hathaway has added Barrick Gold to its portfolio today. Shares in Barrick were up by more than 11%. Long-term interest rates dropped a bit today. 10-year Treasury losing a little more than 2 basis points in yield. We were last quoted in New York at a yield of 68 basis points, and we had some dollar weakness today as well, with the Bloomberg Dollar Spot Index dropping a little more than 0.2%. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right. Thank you so much, Doug. So if you're a political junkie, this starts your 3-month Super Bowl into November 3rd, the elections. It is the DNC, Democratic National Convention, kicks off tonight for 4 days. And joining us for what to expect is Rick Davis, former Republican strategist and Bloomberg contributor. He's a former manager of Senator John McCain's presidential campaign. He joins us on the phone from Virginia. Rick, it's always fun to catch up with you. What's the number one thing you care about today?
Well, I think that we need a moment to launch this virtual convention, right? I mean, so much of conventions are the cheers and the rallies and the excitement on the floor of the convention hall, and you don't have any of that this time. So I'm placing my bet on Michelle Obama delivering for the first night tonight and creating a moment in this convention. She's done it in the past, and the pressure will be on her to do it tonight.
What does it tell you about some of the speakers that are lined up, Rick, at this point, and what the Democrats are hoping to achieve this week?
Well, I think the first nights are usually focused on sort of the consolidation, the unity, and the electorate itself, right? It's a real mixed bag of folks. Andrew Cuomo will speak. Shows you how old I am.
It's okay. We do that all the time, too.
Yeah, and he'll talk about COVID and sort of the response to that, especially with this administration and the weakness of their response. John Kasich, former governor of Ohio, the never Trumper, will go after Trump, and sort of give an indictment of Trump, but also a rationale for why Republicans, especially suburban Republicans, should support Biden. Bernie Sanders will talk about consolidating the party and, how they've got room as progressives to be in this party. So it's a big tent kind of night. And then there's Michelle Obama, who, I think will be part of the star-studded package that they're hoping will get eyeballs onto this show tonight.
Under the show. Who's Mario Cuomo? No kidding. Just kidding. So, Rick, something that I feel like we've talked about a lot is that there's just not as much passion and excitement for Joe Biden that there is for President Trump. And that you can see that reflected in the polls. Like, yes, Biden's been up consistently, but you made the argument, well, with 160,000 dead, like, why isn't that spread even bigger? Can he change that narrative at all today?
It's not so much for today. That'll be his job on Thursday night. It's going to be his chance, really overshadowed in the last 4 or 5 months since he became the presumptive nominee by COVID, to break through. Hopefully for him, he's, counting on 35 to 40 million people watching this. It'll be the biggest single audience he sees before Election Day, and this is his chance to make the case. Realistically, these days, elections are more about who you don't like than who you like. And that's certainly the case this time, and it was certainly the case that elected Donald Trump. Nobody really had an opinion about Donald Trump in 2016, but they didn't like Hillary Clinton, so they were voting against Hillary for Donald Trump. Biden is the beneficiary of that cycle, so a lot of people are voting against Trump. They land on Biden. that's just the way politics is today. But Biden has a chance Thursday night to make his appeal, and if he does a good job, it could be a lasting memory for a lot of voters.
I do also wonder, when it comes to President Trump and supporters, how many people say, yeah, I don't like him, but then they ultimately vote for him?
Well, his own supporters are pretty rabid, right? I mean, like, if you are a Donald Trump supporter today, you probably aren't ambivalent about him.
Right.
I mean,
But that there were a lot of people
forged that alliance.
But there were a fair amount of people who, last time around were like, oh, yeah, I couldn't vote for this guy, and then secretly did. The kind of shy Trumpers, we call them.
Well, I think they were shy Trumpers primarily because they didn't think they could vote for Hillary Clinton, right? A lot of suburban Republicans who really didn't like Trump, he had a very negative public image, ended up voting for him, not because they thought they saw something special in him, and they just couldn't bring themselves to voting for Hillary Clinton. I mean, she was way too partisan for any Republican to cast a vote for her. In this case, I think Biden, in this first night of the convention, is trying to make the case with people like John Kasich, Christy Todd Whitman, folks like that who are going to be speaking tonight, Republicans, that you're welcome in my party. I won't embarrass you. Come over here. And that'll be a different take than Hillary Clinton, who never really reached out to Republicans and kept very partisan to the end.
We have about a minute left. How will President Trump try and steal the narrative?
Well, he's really good at that, right?
Yeah,
It's
that's
all
why I'm
about
asking.
the Donald, and he's going to be campaigning during the convention in various places. I think Arizona, Wisconsin. But I think really the amazing day is going to be Thursday, where he goes to Scranton, Pennsylvania, to campaign in Biden's hometown the day he receives the Democratic nomination for president. So you can expect Thursday to be quite a show.
Yeah, it's going to be weird, though, right? In a virtual world, just got 30 seconds here. I mean, it's going to be a little odd.
It is. We've never seen anything like this. As you mentioned, intensity is a big issue with Biden.
Yeah.
How do you get it in a virtual world without all that raucous? But we're going to see how it plays out, and either this will give new life to future conventions or doom them forever. And this will be a good next 2 weeks. We'll give you that judgment.
It'll keep to time, though. Because there won't be the 17,000 clapping moments.
Watching these last speeches is not going to happen this time around.
Oh, my God. All right, Rick, great to check in with you. Rick Davis, he's a partner at Stone Court Capital, former Republican strategist and Bloomberg contributor on the phone from Virginia. So for those of you listening in New York and San Francisco and watching on YouTube, Bloomberg Business Week continues. If you're listening, on Bloomberg 99.1 in D.C., we've got more politics coming up. Sound On with Kevin Cirilli is up next. All right, you're listening to Bloomberg Business Week on this Monday. Carol Masser, Alex Steele. Coming up, we're going to go back to the latest news on the virus today. Dr. Ian Lustbader is back with us right here on Bloomberg. It is Bloomberg Business Week. I'm Carol Masser. Alex Steele in for Jason Kelly on this Monday. And Arizona, California, Florida, all showing signs that their outbreaks are easing after summer surge. Does that give you some optimism?
Yes.
Yeah, it does, right?
Yeah.
Me too.
I mean, it depends at the death case. I mean, if deaths follow and all that stuff too.
That's true.
You know, I mean, yes, lower better.
Lower is better. We're going to talk a little bit more about today's headlines when it comes to the virus. Get into it with Dr. Ian Lustbader. He's going to be back with us in just a moment. Let's get back, though, to Doug Krisner and your top business headlines. Hey,
So
Doug.
the two of you are in the studio, right?
Yes.
Are you socially distanced?
Yes.
Yes.
Well, good for you.
Yes.
Yes.
All right. So we had a record high today for the NASDAQ composite at 11,129, although intraday we were actually above that level. Nonetheless, this is a closing record for the NASDAQ. Some Dow weakness today. It seems like the big banks fell. This was after Warren Buffett's Berkshire Hathaway pared stakes in many of the industry's top name. But we did have an outperformance in the tech space. Obviously, the gain today in the NASDAQ is a testament to that fact. We had the S&P 500 better by about 0.3%, but the Dow was down about 0.3%. Carnival Corp shares were off more than 5% today. We did have the company telling our team on Bloomberg Business Week Radio that it could resume U.S. cruises this year. However, CEO Arnold Donald went on to say it's still too early to make a determination because those public health restrictions are still in place. Amazon is reportedly in preliminary talks to invest in the U.S. cloud services provider Rackspace Technology. Reuters saying a deal could take 1 to 2 months even to just negotiate. Amazon today was up by about 1.2%. Interesting that the semiconductor stocks rallied today. We have indications that the U.S. will expand restrictions aimed at preventing Huawei from obtaining semiconductors. Reuters indicating the actions will expand restrictions that were announced back in May. Philadelphia Semiconductor Index today was up by 1.2%. 10-year Treasury last quoted at a yield of 68 basis points. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, you're listening to Bloomberg Business Week. Carol Masser along with Alex Steele. Do want to bring in our next guest because if you look at the virus right now, global cases, we're now topping 21.6 million deaths, past 775,000. So that is kind of where we are on this Monday. Let's get to the latest on the virus. Dr. Ian Lustbader is Clinical Associate Professor of Medicine at NYU Langone Medical Center, back with us on the phone in New York City. Dr. Lustbader, so nice to have you back with us. I missed you on Friday, so I'm glad that you came back on Monday. What headlines are the most important to you on this Monday?
Hello, Carol and Alex, and sorry I missed being there in the IB studio with you, but maybe in the near future.
Yeah,
it's great to be there. So a lot of new data coming out, exactly as you say. Total number of cases seem to be slowly declining. Obviously, this is very regional, and certainly the Northeast has done well over the past few months, and obviously some areas like California, Florida have really been more hit hard. The real issues now, even with this 1,000 per day death rate, that's really a concern. Is how do we get people back? And there are some new tests, these point-of-care tests, POCT or point-of-care testing, which we've been very enthused about, which hopefully will allow more rapid results. Many patients, I literally just got off the phone of a patient who is flying to visit family overseas, and the other country wants a result within 3 days. The problem is if he goes to places like CityMD or these other places, it can take 5 or 7 days to get back a nasal swab. It's almost useless. You know, we're spending money on this. And if
because the test is only as good as like the minute you take it, right? Because the minute you walk away from it.
It took someone that I know here at Bloomberg 17 days to get his test back from CityMD.
Well, let's not necessarily pick on them, but a lot of these urgent care,
fair enough.
It's really sort of silly. Many hospitals, we are able on our own patients to order a result. For example, if you have a procedure, a colonoscopy surgery, They go in, get a swab, and we get the result back in 24 hours, and they're clear for surgery. And we can still do this, for example, if people are going to visit elderly relatives. So the hospitals can't handle everything, but there is technology for more rapid turnover. I would advise people, if there's a long delay, it's almost pointless to get it, because exactly as you say, within 5 to 7 days or 10 days, you could potentially be reinfected by someone who you meet socially. So a lot of these tests, for example, like saliva testing, and what will come along is paper is sort of almost like a litmus paper, like the early pregnancy testing. That's really what we need to test kids going
totally
back.
what we need.
Or people, that may be in situations. So, unfortunately, it's been a slow delay in getting that. But
can we get that though, Ian? Can we get something like that?
There are several companies working on this with color change and so forth, reagents. All of that may be a little more limited. I see it coming within the next month or so, which I think would be helpful.
I just can't imagine guys understanding how to do that. No offense. Anyway, back to other testing. So this is a good example. It's a personal example. I'm going to go away with my parents and my daughter and my husband next week. And I was tested 2 weeks ago for a colonoscopy, actually. But I need to know how to get tested now on Friday or Thursday so I can make sure I'm okay when I'm away with them. I don't even know where to go.
Well, come to the office. We'll write out a referral. My patients, we can order, for example, at NYU. We put in a simple order for screening. You call a number, you make the appointment tomorrow, you go and you get screened, we get the result back in 24 hours. So it certainly is available in some areas, and that reassures people. Again, there are always potential false positives or false negatives, but if someone has a negative swab, that is pretty, these days, reassuring to visit family or older family. Again, outside better than inside, keep social distance. You don't want to push the envelope by speaking loudly or singing or shouting, in a contained area. But with nice weather, if people can sit outside, wear masks, and if their swabs are negative, I would certainly feel comfortable with that, and I've done that with friends and family.
Ian, your phone's going to be ringing off the hook because people are just because I hear this constantly with people who want to get tested, and it takes so long to get the results back, and they don't even know how to go about it to kind of get a test, especially if you don't have symptoms. So hang on for a second. We are going to do some news, and then we're going to come back and continue talking with Dr. Ian Lustbader. He's Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone from New York City. My daughter needs to get a test, too, and we're like the same thing. She's going to go maybe call her doctor and see if they'll order it.
And I didn't mean to pick on CityMD. I'm
No,
just saying
I know.
that is the easy, cost-effective way for some to do it because it's a walk-in kind of basis. It's available in all areas of the city, for example. So
accessible, right?
If you don't have it, right, exactly.
Exactly, but it's taken too long for them to get their results back. All right, let's get back to World and National News headlines. Let's see what Ed Baxter is up to in San Francisco. Hi, Ed.
Hi, Carol. Yeah, California experiencing one of the most extreme heat waves in generations, pushing the power grid to its limits, running the risk of not being able to push out the power needed to be able to keep lights on and air conditioning running. Governor Gavin Newsom has filed an emergency declaration, ordered an investigation, and is podium pounding unhappy.
Just on the sidelines, I can assure you shouldn't be pleased with the moment that we're in here in the state of California. We'll get to the bottom of it, and that's why that investigation into what happens and its implications for the future will be done swiftly and immediately, and we will lay out in detailed terms what we're going to do to make sure this simply doesn't happen again. That's the certainty that we are committed to in this moment, obviously, of uncertainty that you have been put into.
Now, he says he's trying to get energy from large consumers at the moment, says rolling blackouts over the next several days, very, very possible. Democratic convention begins tonight, virtual basis, with feeds coming in from all over the country. Senator Cory Booker says it will be intimate and a chance for the party to talk about the current and the vision for the future.
We know the catastrophic leadership of this president, especially in this time of pandemic, economic decline, but really, here are two candidates that are going to talk about what we're for.
Now, full convention coverage after Daybreak Asia here on Bloomberg Radio. The White House Virus Task Force Coordinator, Dr. Deborah Birx in Arkansas today, intimating not enough testing is being done.
And I can tell you we're not going to stop until I feel like there's enough testing out there, both for diagnosis and surveillance.
In San Francisco, I'm Ed Baxter.
All right, many thanks, Ed Baxter there. So this story all of a sudden popping up on the Bloomberg trending high among the most read. It has to do with Citigroup asking a federal court to order Brigade Capital Management to return its share of more than $900 million that the bank mistakenly wired to Revlon lenders, some of whom are now locked in a bitter fight with Revlon.
So this is what you call a
ruh-roh.
So
you did what?
Yeah, so that was definitely an error. It's not only that they're now suing Brigade. There we go.
Yeah.
And they're asking for it back, and the lenders are like, "Hey, we lent the money. We deserve it. We deserve the payment back." But also now they're going to face OCC and some Fed scrutiny as well. So the Office of the Comptroller of the Currency and the Federal Reserve is going to be looking into that on how it wound up sending almost $900 million in payments to Revlon's lenders. So, I mean, it is going to get worse before it gets better. Like, we're waiting for this. It was like 72 hours until it happened. So, of course, we're going to see that come down.
It is so a rut-row. Some of the lenders refusing to give it back. That includes 3 firms who claimed Revlon was in default and should have repaid them anyway, according to those in the know. I mean, this is kind of wild. And you do wonder how it happened. How does that mistake happen?
Yeah, I think that the OCC and the Fed are going to try and figure that one out. What's funny is that Brigade is saying that they should have, Citi is saying that they should have known that this random surprise payment shouldn't have been made. But I don't know. I mean, like, you lend someone money, they give it back to you, you're going to take it.
Right, exactly.
Right? I mean, it's not your bad. You didn't mistakenly cut the check.
Take it and ask questions later?
Kinda.
Like,
and then
what
they're like, we
happened?
want it back. They're like, hey, man, we lent you money, you paid me. Tough. So it's over now.
Oh my God. It's just, as sophisticated as kind of financial transactions have gotten, right? And there's all these kind of checks and balances and systems. It makes you realize that, things do consistently and constantly go wrong. And so this story is far from over.
No, it's pretty funny. Apparently they're in the process, Citigroup, of re-signing as administrative agent on a loan prior to the blunder. Whoopsie.
I'm shaking my head. I'm shaking my head. Ruh-roh was right. You're listening to Bloomberg Business Week, and this is Bloomberg.
Tech stocks outperformed today, and that was enough to lift the NASDAQ composite to a record high, 11,129. Although we did finish off the best levels of the session, we did have weakness in the financials today. Warren Buffett's Berkshire Hathaway reducing stakes in many of the big banks. So at the end of the day, the Dow was lower by 0.3%. NASDAQ composite picks up 1% to an all-time high, 11,129. And in the broader market, the S&P 500 was ahead 0.3%. One of the standout performers, Tesla, shares rallied more than 11%. Dan Ives, the Wedbush analyst, has raised his price target on Tesla to $1,900. He expects a rebound in demand in China to help the company reach its goal of delivering 500,000 vehicles this year. American Airlines shares falling 5.3%. The carrier is going to cut flights to some small and medium-sized cities. You know, the industry aid package will expire as of September 30th. CNBC was reporting that flights for up to 30 destinations could be on the chopping block. In the bond market today, long-term interest rates coming in ever so slightly. 10-year loses about 2 basis points in yield. We were last quoted at 68 basis points. We had a rally in crude oil, WTI picking up about 2% today. Right now in the electronic session, 42.85, and dollar weakness with the Bloomberg Dollar Spot Index down about 0.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, thank you so much, Doug. So apparently on Monday, I'm going to be able to go to the gym in New York City. That was a big news from Governor Andrew Cuomo earlier today. Still with us is Dr. Ian Lustbader, clinical professor of medicine at NYU. Okay, do I want to go to the gym?
Well, it all depends on how they do it. Many gyms, many airlines now are doing ultraviolet light treatment, which I know has been in the news somewhat, and certainly with the president. But it does turn out that for many viruses, and we think COVID as well, certain wavelengths of ultraviolet light can be very helpful. So you can potentially sterilize equipment in a rapid fashion, either with topical sanitizers, or this ultraviolet light. The bigger concern really is not necessarily surfaces, but aerosolizing, right? So ideally, people really should wear masks, and not the kind with the little valves in them, because that will protect you from when you inhale. It'll filter out viruses, but when you exhale, if you have the infection, that then can be spread. So really, something like N95 masks or other face masks would be a little more effective. And people typically, when they exercise, breathe very heavily, so it is a higher risk environment. It is not nearly as safe, so you certainly need more distance, ideally air filters, HEPA filters, ultraviolet light. There is some risk in going to the gym, but if it's a small number of people and people are not coughing, they're wearing masks, probably reasonable, and those steps will have to really be done with school kids as well. That sort of prudent approach in addition to cohorting kids and so forth.
Well, Ian, that's something I wanted to ask you. What do you think about schools reopening in New York City?
You know, I think areas that have a low case rate, and New York is one of them, unlike perhaps Florida or California. So I certainly think in areas where the number of cases is down, the number of hospitalizations is down, it's reasonable to do that. We know a lot of people, and kids especially, can be asymptomatic and harbor the virus. So both older teachers or professors and kids could potentially be at risk. Kids a little less so. But again, I would say if there's social distance, good ventilation, if you're cohorting people, in other words, 3 or 4 hours in the morning, and then you have a separate group and another group, that you could do hybrid learning. People need that in-person interaction. I mean, my own kids, having done remote learning, it's not the same thing as being in a classroom, interacting with your peers, interacting with the professor. So I think we have to do it. I think we can do it with certain precautions.
So what about then indoor dining? So if we're able to go back to school and we're able to go to the gym in some capacity, what about movie theaters and indoor dining? What is so drastically different about them?
I don't think they are that drastically different. You know, most restaurants are not nearly as spacious as classrooms or movie theaters. And I think if you limit the number of people in a movie, it is with good air ventilation, it is potentially doable. Again, you're trapped in one area for several hours, for a movie, but as you would potentially in a classroom. But I think smaller restaurants, it would be very hard to do that. I mean, typically there's some tables are well less than 6 feet apart. So I think if you can get adequate distance, do the ultraviolet light, get adequate ventilation, it's worth a try. I don't see how that will be economically viable to have that volume to support your staff.
Hey, Dr. Lustbader, when you see, cases over in Europe starting to kind of perk up again, what's going on? Is it just people we all kind of relaxing a little bit and stop wearing masks and not doing social distancing? I mean, is it as simple as if we just keep on wearing masks wherever we are in the world? The science says it works. If we just keep doing that globally, will we get to a better place, a safer place, much more?
Okay, ladies and gentlemen, time's up for today. We did great, 600 pounds for Monday. That's not bad. Well done to all of you who followed our trades. So I'll speak to you tomorrow, as always, from 8 o'clock UK time. Stay safe. Have a fantastic evening. I'll speak to you tomorrow. Bye-bye.
Herd immunity. And as long as you don't have a widespread vaccine and as long as you don't have herd immunity, there is certainly a chance to get a second or third wave, as happened with the Spanish flu. Hopefully that will be shortened with vaccines hopefully coming out in around the January 2021 timeframe. But before that, we all need to take flu shots. We all need to reduce our risk by doing that, wearing masks. It would be very bad to get the flu and COVID at the same time, much higher risk. So prudent behavior, taking your vaccinations, being in